Alrighty, here we go. All right. Welcome on back to another stock market live stream. Today's obviously a very, very, very big day. How big of a day is it, Kevin? It's so big that NVIDIA reports earnings today and everybody is so excited about Gemini. Gemini. Which is really interesting because I actually fell in love with Gemini about a month ago and I started talking about it on the channel. I'm like, damn, dude, Gemini's pretty good. It's actually better than ChatGPT. And now Gemini 3 is out and I'm like, wow. I mean, 2.5 had some problems, it wasn't perfect, but now it's like, damn, okay. That's a nice little step up that's leading a lot of people to wonder, like, okay, what's next? So the next phase of this cycle is potentially, and this is the idea, this is sort of what the market is looking at right now, is that the next phase of this cycle is, okay, I guess everybody's got to try to compete with Google now. Let's go spend more dollar hollers. And I don't know if the financing is available for this, but I know Google's going to be fine. That's why Google's running like crazy. The fact that they trained Gemini 3 on TPUs is also very, very impressive. On top of that, you have, the stack, though, moving up. Chips, AMD, NVIDIA moving up. 232, we regained 232 on AMD, but we're already kind of rubber banding back to it. Not great. Same thing on the Qs. We had a nice explosion within $1 of 595. We were talking about that both yesterday and today in the Alpha report. We're like, those are the lines, folks. Those are the lines. We'll see if we end up bleeding again towards 595 as we get into NVIDIA here. It seems like it's hard to make that sort of bet given that Google's up so much and it's such a large component of the Qs. But, wow, I mean, today is a Gemini day. You got to give them credit for that. Now, Blue Owl, some of their funds were starting to rise at the open as people were excited about Gemini. But as you can see, it really just became an exit liquidity opportunity on a couple of these. Although this one's up a little bit, Blue Owl Capital. These, I think, are the two feeder funds that they want to liquidate that are selling for a discount to price to book. And then this is the main stock, which is trying to consolidate the mess and solve the problems. This morning in our Alpha report, we were, or in our course member live stream, we analyzed Target, Supermicro, Fastly, and Google's valuation. We did a lot this morning in the Alpha report. I'm honestly kind of exhausted with how much we looked at stocks this morning. It was crazy. But, I think the fundamental analysis we did was really, it gave us a lot of insight into why this bifurcation in the economy is not only continuing, but also why Supermicro is failing and why Target keeps going down. I hate to say it, but I keep looking at Target. I feel like I'm drooling over Target because of this 5% dividend. But then I have to tell myself, bro, Househack is paying 5%, and I don't have the mistakes that they're making going into, a potential recession. I think they're making a giant mistake. They talk about it in their earnings call, what their plans are, and I'm like, this is dumb. What you guys are doing is dumb. So I'm very disappointed because I wanted to like it. I really wanted to like Target's earnings. I don't own any Target. Maybe it's a good thing. But anyway, crazy. So I guess Warren Buffett is up a little bit on his last trade, eh? Good for him. So let's see what we got in the way of news. Oh, and Bitcoin. Look at this. So you had the Winklevoss bros and a bunch of crypto enthusiasts, big names. They're like, oh, last chance to buy Bitcoin under 90,000. And here you are slipping back under 90,000 after they're pumped to 95. Pretty crazy. Somebody says, what's my take on Meta? I think Meta is very cheap. I think their LLM is absolute trash. I've said that, from day one, mostly because I use the Meta glasses. And I remember, I went to Japan and we vlogged it. And we're like, yo, this is bullcrap. The LLM is complete trash. So the LLM and Meta is trash, but Meta is an advertising play. And nobody sees it as that right now. I think people are trading Meta like it's a failed LLM, and it is a failed LLM. But that's not where the money's coming from right now. Anyway, different for Google. You know, Google's one subscription. We have this in the stock tab for course members. I'll show you. I mean, this isn't like a big secret, but we where is it? That's Target. That was Super Micro. Oh, yeah, we threw this into the, I'm okay with this. So this was in our stock tab this morning in the course stream. So, you know, you could go on the right over here. If you're in the stock tab, you go to the right and you can kind of pick the stock that we've analyzed and done fundamentals on already. And you can kind of see like the valuation of where it sits right now. Right now, Google, in fairness, is at like a 2.2 peg. Even after it's run, its peg is actually decent. It's nowhere near as cheap as Meta's. But anyway, I wrote this down, which I think is fair to say. I think all this AI stuff breaks in two ways. Number one, other companies fail and go bankrupt thanks to Google's progress here, which I don't think is a near-term issue. It is if we can't keep fundraising. You know, you can't keep getting debt for these companies. And the other issue is that other companies potentially lash out, spend even more to try to catch up, like OpenAI, even more spending. And that's why NVIDIA is moving, right? So I do think this sort of like movement, though, this progress in Google actually increases the risk of investing into XAI and OpenAI. And I actually think you increase the chance of XAI and OpenAI failing, where both of those people are in this pissing contest. You know, Elon and Sam Altman are in this pissing contest against each other. And they actually increase their chances of failing. Both of them increase their chances of failing, while Google's, you know, I mean, they're running with the prize right now. It's very, very, very impressive. But yeah, I actually love the Meta sell down right now. Let me see what their peg is right now. So let's see here. Stock tab, Meta peg check. I'm gonna write down starting to trade like a failed LLM play. Good. It's an ad play anyway that's now going on sale. Okay. So if I throw in Meta, the current, yeah. So every time I do a little update on a stock, this is just a really quick one in the stock tab for course members. We show the current share price and then what we call the K-peg, the Kevin Peg ratio. So Meta right now at 1.15. Meta is basically half as expensive as Google right now on a valid, like a fundy basis, right? Which is remarkable. And you have to think about something for Google. Google is still going to have some cannibalistic aspect to it. You know, the better Gemini gets, the less you need Google search. So maybe instead of users paying for Google via ads, they're paying via Gemini subscription, right? But not everybody's going to take a paid plan. So, you know, something to think about. That's a headwind that I don't think, that headwind Meta doesn't have. I'm going to say that. Meta doesn't have that headwind. And take a look. Oh, yeah, here's Fastly. Fastly at a 4 peg. That was another analysis that we did this morning. I'm telling you, we did a lot of analysis this morning. I'm exhausted. But it's okay. It's all right. So, okay, cool. Let's now see what we've got going on. So Target deserves, honestly, to sell down even more. They need to cut the dividend. I don't think they want to because their stock's going to crash when they cut the dividend. Everything's selling off a little bit. Bitcoin's about to drop under 90. This sort of hype and euphoria is already wearing away over here. And AMD just lost 232, which is bearish. All right, let's go see what's going on the news. And somebody says Meta 500 would be good. They're all going to crash if we have a recession, right? If we have a recession, some will crash less. I actually agree with JP Morgan that the Mag 7 will do less bad than other companies. And we just lost 90 on Bitcoin. Oh, this would be the perfect opportunity to get the Winklevoss tweet. Winklevoss Last chance under 90,000. I don't know how to spell his last name, though. Oh, yeah. At Cameron. Oh, that's his thing. Okay, at Cameron, Bitcoin under 90,000. So... am I an asshole for doing this? I think I am. I think I'm a troll. I think I'm officially the same kind of troll that I get trolled by. Oh well. Holy smokes. Another chance to buy under 90K. I'm sorry. I'm sorry. I shouldn't do it. I shouldn't do it. I shouldn't do it. It's mean, but I did it. Oh well. Atlanta Fed now 4.2. Are you kidding? Dude, the Atlanta Fed, I'm honestly, I like, there will be nothing more hilarious and ironic than us going into recession after the Atlanta Fed says we're at a 4.2 GDP. And it keeps going up. There will be nothing more ironic than the Federal Reserve being so wrong. Yeah, that would be something. Anyway, okay, retail about to get smoked. Troll hack, trollhack.com. Yeah. Somebody says LLMs don't replace search. I disagree with you. I really disagree with you. I think as LLMs broaden out, they absolutely replace search. I get answers so much faster when I'm looking for, encyclopedic information. Blue Owl did say they will end their planned merger. Oh, did the vote not go through? That one's a little complicated for me to follow. It's the entities are way too shystery and complicated for me. Maybe I'm just too dumb and my brain can't process what's going on with Blue Owl, but whatever. So, all right, let's go see what the suits are saying today. Somebody says, I think we're all about to get rugged. I hope we're wrong. Yeah. Honestly, I really hope that we don't get rugged also. I think everybody benefits from a good, strong economy. NVIDIA's sales growth is expected to slow. Well, I mean, of course the sales growth is going to slow at some point. What do we have here? Wall Street will get a sense of the billions of dollars being spent on AI when NVIDIA reports. So goes NVIDIA, so goes the market kind of report. Absolutely. Absolutely. Analysts expect the chip behemoth to show more than 50% growth in net income. Wouldn't be surprised if Bitcoin caused bank contagion. Many big enough now. Bitcoin matched to powder keg. Yeah. It's actually interesting you say that because if you have so much more institutional allocation to Bitcoin, it actually seems like it almost makes institutions more at risk, right? Because now you're so exposed to a risk asset. That's what Bitcoin is. It's a risk asset, right? Reasonably straightforward. Will be taken to represent more than 40% of NVIDIA's sales. Projected to increase their combined spending 34%. The risk is that the numbers could become unreliable if big spenders have to pull back their commitments. Right. Yeah, but where are we seeing a pullback in commitments yet? So far, we still see financing, right? Somebody says Costco's dumping. Is Costco really dumping? I would love to buy Costco at a much cheaper price. Like, you just have to look at the performance of Costco and Target. And I understand there are management issues here. Like, I totally understand. I read the earnings, and trust me, I totally disagree with, okay, this is obviously an ego thing I'm about to say, but I think I could run Target better than they're running it because I think they're running it into the ground. So I'm not applying for the job. I'm just saying, I think they're making big mistakes. But if you look at Walmart, Target, and come on, where's the compare button? If you look at Walmart, Target, and Costco, the performance of these plays could not be more different. So if I go out to a year, look at this wedge. Let's go 5 years. Look at that, dude. Costco and Walmart have actually performed quite well. Whereas right here, you have Target tanking. You know, Target's performance, look at this. Dude, Target is down 50%, whereas Costco and Walmart are up over 100%. Dang, bro, that's tweetable. I gotta tweet that. Oh, we gotta get the fire tweets out today. Yeah, I don't even know why I do. Like, I know Elon steps on my neck when it comes to algorithmic engagement on X, but I still think it's interesting. It's almost like my own little log. Target down 49% in last 5 years, while Walmart and Costco more than doubled. Yeah, just leave that out there. Okay, cool. So back to Doomerville over here. We should, I'll put those charts up also, just sort of like, we could, yeah, all right. Quick sort of just housekeeping thing. If you haven't signed up, I keep getting supportive emails, and this is why I'm saying it, because it's free. But if you haven't gotten the Daily Wealth yet, I really encourage you get it. If you prefer it through email, you don't want to go download an app or whatever, just go to meetkevin.com/data and drop your email like halfway down the page for the Daily Wealth. Once a day email, very straightforward. It's written by me. It's not like some AI bull crap, and worth looking at. And then we do have today, today's NVIDIA earnings day, so we have the NVDA coupon code for the Alpha report also at meetkevin.com that expires today. You can check that out over at meetkevin.com. But insane crash of Target of 50%, while Walmart and Costco have doubled in 5 years. Wild. I'll drop that out there. Okay. So these players in the AI space have gone out of the way, continue to release the expectations bar. As long as they stick to their goals, NVIDIA should benefit. Yeah, I agree. I think it's hard for NVIDIA to give us, like, bad news. Like, they're so bullish. Strong earnings, encouraging outlook, could provide some recovery for investors. Despite the recent sell-off, NVIDIA is still up this year. The valuation for NVIDIA is not unreasonable. It's not unreasonable at all. In terms of earnings themselves, investors will be looking for strong Blackwell series numbers. I think they'll be fine. Margin expansion will be key. Dude, how much more margin can they take? It's already so good. Analysts see NVIDIA's booming sales growth in the coming years. Company is expected to post a nearly 60% increase in revenue. Even if NVIDIA puts up the solid results, it might not translate to jump in the share price because of investor sentiment. Peter Thiel sold, Michael Burry, blah, 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 blah. NVIDIA, yeah, okay. I don't think they actually really told us anything here. NVIDIA shares has slumped since hitting a record. That's true. It was like 210, I think we hit. So 40%. This is an interesting stat, though. This one I want to save. Here. Why is this not working? There we go. So 40%. Let's write this down. On NVIDIA, Target, on NVIDIA, we have 40% of NVIDIA sales come from Microsoft, Amazon, Alphabet, and Meta. IMO, as the TPU or custom chip manufacturing lines ramp, NVIDIA will begin to lose its PP slowly. Slow softening. That's over the long term. I mean, that's reasonable. Let's link that so we cite it. Go. Okay, cool. Boomers. Target, Lowe's. Oh, Lowe's actually, dude, it's because we've been renovating with House Hack. That's why Lowe's beat. We go buy a ton of crap at Lowe's. Where's my dividend check? 5% on Lowe's. Good for them. Nice little bounce there, huh? Wow. What'd they say? Pick up in online sales and growth in demand from professional contractors. It should say growth in demand from house hack. They just bought 11 homes. That's all it should say. Lowe's reported positive same-store sales for a second consecutive quarter. Digital sales, home services, and in-home services saw continued growth in sales to professional contractors. Okay. Yeah, we have a pro membership with them. And we get some sick discounts. Both retailers trying to boost sales by courting professionals. Yes, they are. Like, I've had managers at Lowe's walk up to me and they're like, please, like, buy from our store only. Like, they're all competing against each other. They're trying hard. Overall, U.S. homeowner remains healthy. Balance sheets are strong. Consumers continue to spend. That's not what we saw at Home Depot, but okay. Home Depot blamed the weather. Wow. Long-awaited inflection in home improvement spending has yet to materialize, says Bloomberg Intel. Focus on productivity, e-commerce, and pro channels, 2 areas of strength. Smart. Good for Lowe's, honestly. I'm happy for them. Yeah. There are 2 types of pro memberships, by the way. There's the Lowe's for Pros membership, and then there's the Lowe's contract relationship. You know, where you get contract pricing, and you know, when you quote orders, you know, you get like 20% more off. It's crazy. At least that's how they market it. JP Morgan supersized checks are blowing away all other lenders. Right. So the same company that's financing, you know, this insanity is also the company that's been rug pulling. JP Morgan dominating the field with giant checks, private credit. JP Morgan's writing giant checks. What are they writing? 17.5 billion for Warner Brothers. $20 billion check for EA. Damn, bro. These are huge loans. They're still lending, though. I mean, that's bullish. Wow. Concerns mount about cracks in the credit market. Timing is notable because the bank dialed back underwriting deals in leveraged finance, typically one of the riskiers. But they're doing the big ones. Apollo has swallowed up. Right. JP Morgan, here we go. Volume of deals. Wow. This is year to date, isn't it? Yeah, it is. 2025 year to date. Yeah, it's still the biggest of the banks. Financing the big deals. I mean, it makes sense. Few have the same muscle for a $20 billion check as JP Morgan. Yeah? Yeah. All right. Not really particularly interesting. Okay, so Chevron, Venezuela, Senate panel, United, junk muni. United pulls junk muni deals for Houston Airport. What is this? And what is this? BlackRock. Okay, so United Airlines has shelf pricing of 2 muni bonds intended to finance Houston. Airline has tapped muni investors for an equipment facility. Bonds carry a high yield. United has elected not to proceed with the issuance. Interesting. So the higher risk plays, I mean, it's also this tale of 2 cities with borrowing. So, you know, JP Morgan is doing these giant loan deals. Meanwhile, the riskier sides of business are struggling and are getting punished. Like, I guess, United here. Look at TJX. Man, all the consumer plays. Yeah, it's a discount consumer play. I haven't looked at TJX in a while, but the consumer's a hard bet to make right now. So, you know, JP Morgan, and big lending deal volume. Let me compare this. So they did, last month the bank in Carlisle drew $5.8 billion deal for Carlyle. They did... What'd they do? Oh, that was led by Kushner. Interesting. Ah, look at that. So what did they finance there for EA? That's related directly to Trump. They did $20 billion check for EA, which Jared Kushner negotiated with Saudi investment. Trump play. Obviously, this is a Trump play. And then $17.5 billion Warner Bros. $8 billion on 3G Capital. This is in contrast. United Airlines, you know, BB plus muni bond sale around 100 mil failed, you know, and so they pulled it. Oh, okay, now NVIDIA's Jensen, and Elon Musk, they're talking right now. I'm just seeing this headline come over. It says XAI and Saudi Arabia doing a 500 megawatt project with NVIDIA. And Jensen reiterates this. Also wants to build supercomputers with Saudi Arabia. You know, hence, no surprise on the timing of the Saudi Crown Prince, right? Saudi Crown Prince visited the White House yesterday. What a surprise. Actually, that's not even my opinion. We know that happened. Elon Musk says humanoid robots will be the biggest product ever. And we've heard him say that a million times. Okay. All right, so let's see. This was the JP Morgan lending. Just again, the tale of the two cities. This was the United poll. And then, oh, it's actually, oh, that would include refinancing. Okay. 102 million, right? Okay, what's this BlackRock thing? BlackRock says boosting exposure to U.S. equities, increasing its overweight position on equities to 3%. BlackRock is throwing its model portfolio muscle behind the stock market, despite lofty AI valuations. Huh? All right. I guess that's a
bullish catalyst.
All right. So what else? NVIDIA needs investors to party like it's 1999. Well, yeah. Oh, yeah. Blue Owl scraps merger after private credit funds sell off. Oh, Max was saying this in the chat earlier. Really? Because I was dumping on it yesterday. Is calling off its merger between its two private credit funds after scrutiny. Yeah. Yeah. Firm terminated the deal. Okay. Redeeming. The initial terms of the agreement barred investors from redeeming. Yeah, because people want to redeem at NAV. And of course, they're trying to brand it as, oh, well, we were trying to create long-term value. No, you weren't. You were trying to prevent people from redeeming at NAV. And you got exposed. You guys got exposed trying to prevent people from redeeming at NAV. And, you know, that's what happened here. So that's high BS, in my opinion. As part of the proposed deal, blah, 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 said buyback program was announced, blah, 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 blah. Yeah, the company said they're going to resume their redemption program at the beginning of 2026. Right. They're hoping to buy time and get through this. They're literally buying time. That's actually scary. They're buying time. So, you know, when those redemptions resume, I don't know. I don't like it. All right, what else do we have here? We're about to lose 600 on the Qs, by the way. So, what's going on the sticks? I've got Target almost down 2%. Good. Deserves to go down. Meta's almost down 2%. The failed LLM. Nvidia is still rotating down on the 5-minute. Settling. Oh, okay. All right. What is this? Bouncing on the 200 minute. Then I've got the Qs. Yeah. Little euphoria unwind here, huh? Oh, back over 90 by $27. Okay. Singapore says, what is this? Fierce competition between the U.S. and China will persist despite their quote-unquote truce. Rivalry will continue. Yeah, I mean, this is not really news. Is that news that China and the U.S. want to compete? I don't think so. All right. Harvard to probe Epstein ties. Big deal. Okay. Family offices hunt. Returns and global defense. Nest eggs. Private equity loan revolution. Ordinary Americans are helping throw lifelines to private America. This is scary, by the way. Private equity managers are desperate for cash. That's bad. Insurers are lending it out for higher returns, exposing them to hard-to-sell assets. Oh, man. This isn't good. The insurance and annuity arms of Apollo, Ares, and Carlyle rank among the most active and providers of esoteric financing, basically in the private credit deals. $18 billion from Apollo into NAV loans. Some loans enable payouts to investors who've been waiting for years to recoup hard-to-sell assets. Relatively obscure niche product, NAV lending has been gaining momentum and is snowballing. Roughly $225 billion of NAV loans outstanding will probably double in the next 2 years and surge sixfold by 2030. Yeah, I don't know if that's good. NAV loan, because if net asset value goes down, you're all upside down. High rates and high demand have drawn a variety of players. Look at this. The rewritten retirement promise. Palm trees, broken piggy bank, wheelbarrow of cash, and fire. That doesn't look good. Oh, they're doing like a series of this. Our focus is top of the market, investment grade loans with low LTVs and high diversified. Right, says Apollo. Let's see here. This is their defense. Even the worst performing private equity funds barely lose more than 10%. I always worry when people start saying stuff like that they've got giant blinders on. Let's see. We've seen a few defaults, but nothing that really tests the market. Right. That's how it starts. Private equities demand grew after the pandemic. NAV loans. Pricing has improved. Recent industrial survey shows. Let's see. More lenders are letting borrowers defer interest payments. See, that's a problem. Known as a payment in kind. These schedules can raise the borrowing costs. Payment in kind reaching the low teens. So you're seeing an increase here of these private credit deals not actually being able to pay their bills. Well, that's not good. Here's an example. Vista Equity Partners, $1.5 billion NAV financing against its portfolio. The initial rate was 9.3% and gave them the option to defer interest. Oh, my Lord. And then it matures in early 2028. Oh, no. These are like short little lifelines that are getting thrown out there. I don't know how I feel about that. All right. Let's try The Economist. The Economist. Crypto got everything it wanted, now it's sinking. That's a great thumbnail. I want that thumbnail. Okay, let's see what they say. Yeah, this is the Jensen Elon thing. I'm watching for headlines on it. I don't see anything super exciting right now. So I'm watching for anything new on that while we hunt. Well, I've been 17 years since Satoshi first unveiled the crypto. In recent years, we've gone from mockery to mainstream finance. Broad acceptance. These victories now pose a problem. It's hard to say anything with confidence about the future direction of assets like Bitcoin. Many investors have tried and failed to say, but there's been a clear pattern. Every exhilarating upswing has been talked about with greater acceptance coming. Right, but they're basically saying you've now, like, how much more greater acceptance can there be? Right, and then there's the risk that crypto sentiment spreads. Yes. Bitcoin may have exhausted the most obvious catalysts. Some legislators have supported the purchase of Bitcoin on open market. I mean, that was a boring article, honestly, by the Economist. I hate to say it. That was boring. I'm disappointed. Yeah, okay, back under 89 now, BTC. Tesla's at 407. Qs are holding 600 psychological level. Okay. Right. So, what the hell? Where'd my other tabs go? Whatever. They usually have hits. Yeah, no, the it's all right. No, I like The Economist. I think The Economist is actually great. I'm a big fan. I get their magazine too, which is really just a printout of what they have on their website. I mean, you know me. I get all the paper. I don't always read it all, but because I spend so much time reading on other stuff. But bodies keep turning up in Syria. You know, it's terrible. NVIDIA results, delayed jobs data, fine, old news. Saudi Arabia wants F-35s, I know. Ukraine gets the ATACMS, more debt for Elon. We already knew a lot of this. So this is boring. A progressive news distortion epiphany, the art of the deal with Saudi Arabia. Oh, I want to see some of these. These could be fun. Brookfield is raising $10 billion for a new infrastructure fund. Oh, that's cute. Adobe strikes deal for SEMrush. Oh. Adobe's trying to do anything to get growth right now. This is good for the auto industry because the Nexperia chip shortages actually led to some plant closures for a while. Okay. All right. Let's see what they say here. What's this news distortion? The left's media censors are suddenly discovering the dangers of letting the government regulate speech when their political opponents are in charge. Yeah, the tables have turned, right? Doesn't make it any better on either side. And the Twitter files were a disaster. FCC has rarely enforced the policy. What policy? Basic factual information, true and fair discussion. Brendan Carr complaint against CBS, wielding news distortion policy. I don't think they're actually saying anything new here. We already know Brendan Carr is another shill and a shyster. Wasn't long ago, Saudi crown prince was declared a pariah in Washington. President Biden came to regret that remark soon after he needed help on oil prices. Yeah, fair. By contrast, President Trump needs no reminders about the importance of U.S.-Saudi relations. There's a lot of money. Let's see. MBS knew what he wanted on the trip. He wants F-35s. Would the U.S. agree to defend Saudi Arabia? We pretty much have, Trump says. F-35. Security guarantee. Trump was less committal. Crown Prince has spoken about pursuing nuclear weapons. I don't think that they want to actually get into the Abraham Accords. I know Trump really talks about it, but I don't know that they're actually going to want it. Any comments on this? Let's see. No, I don't do energy plays, honestly. I see your comment there, Reels. The reason I don't do energy plays is because, A, they're a commodity, so I think it's hard to find pricing power individually in them. And I think the sector's already blown up, and I'm actually more worried about, a lot of the... I'm just worried about overbuilding. I think the best way you should look at the overbuilding, I think the Financial Times had a piece on this. Financial Times, Power, Black, projects, dark, projections. I'm just trying to put keywords in here. Yes, my key. Look at this random Google search I did. Financial Times didn't even spell it right. Power, black, projects, dark, projections. These were just words I remembered from the article. But this is the one. If you're into energy plays, you should read this article. Phantom data centers, muddy forecast for U.S. power needs. This was a fantastic piece we went through. And it's basically this talk about how everybody's got these insane projections for power, but they might be just that, insane projections. What will the U.S. get? Please don't insult us. What will Trump get personally? Yeah. This was a business trip for the Trump family. What will we get in return for selling our national soul to this petro despot? Dude, these comments are hilarious. Not an advertisement for democratic values. Trump does not support democratic values. Oh, the comments. Is a recession still quarters of two? Well, a technical recession is 2 quarters of negative GDP. But what matters more is the labor market. If we get a spike in layoffs, GDP will roll over. Your definition of 2 quarters of GDP will come like after the fact. Like we'll know it after the fact. Like, hey, by the way, we were in a recession. It's the labor market though to watch for. Okay, so, well, that's boring. So the Journal, the Doomers, relatively boring. Bitcoin keeps losing. Too much winning. I can't handle the winning. You know what they say? Sleepy Joe. I don't know what they say. Yeah, Hood's given up a little. Wow, dude. The Circle tank is insane. Circle finally had a green day yesterday. Doesn't show up on the average, obviously. But just keeps bleeding out. You're almost at 0 on the retracement. Almost fully retraced. Jeez, man. Okay. Immigration raids expand. Boring. Bill forcing Epstein files to be sent to Trump today. Yeah, they're going to redact the crap out of it, though. So it doesn't matter. This is not really a release of the Epstein files. It's a release of redacted Epstein files. Trump eviscerates reporter. Yeah, but that's embarrassing. Let's see here. Look into Khashoggi's uncle and the ties to Epstein. It's wild. Oh, that does sound wild. Khashoggi, uncle, Epstein. How does all that stuff get linked? The connection between the journalist and Jeffrey Epstein through the uncle, an arms dealer, a billionaire who was a key figure in the Iran-Contra affair, was a financial client of Jeffrey Epstein in the 80s. You gotta be freaking kidding me, man. Epstein reportedly worked as a money manager for him. Holy crap. Donald Trump purchased the Trump princess from Khashoggi in 88. Are you kidding me? Dude, it's all late. Oh my God. What? The guy who was murdered by the Saudis? His uncle was sold Trump a yacht, and Jeffrey Epstein was the money manager? What the, come on, man. I can't, it's too much. I can't handle it. It's actually just too much. I can't, I'm sorry. I need to look away because it's too much. No. No. I do want to look up the super yacht. What was the super yacht called? The Trump Princess? Kingdom 5KR. Super yacht by Khashoggi that is now owned by a Saudi. It was featured in the James Bond movie, Never Say Never Again. Inspiration for the song Khashoggi Ship. What? After he ran into financial problems, he sold it to Donald Trump for $29 million. Dude, he probably flipped it. Oh no, he lost money on it. Wow. I'm actually surprised. Trump lost money on it. Sold it for 20 mil back to the Saudis. Oh my gosh, this ship has been ran through. This ship has been ran through more than people on Epstein. Okay, I'm just going to stop talking. So, 10-2 spread. Yeah, let's talk about treasuries. 10-2 spread, 54. Okay. Uh-huh. All right. Washington Post, despite congressional action, quick release of the Epstein files is in doubt. Right, because the DOJ is going to have to, censor it all. These are the deadliest roads in America. See if one is near you. Where are they? I want to know where they are. Memphis, Tennessee. Oh, that's unfortunate. Okay. DeSantis makeover of left wing. Florida's college has been costly. Ooh, don't care. Poverty spikes in the land of tech billionaires. Well, that would be America, right? Oh, in San Francisco. You don't say. The Bay Area's poverty rate is rising significantly, jumping by 4% in less than a year. Wow! For the first time in more than a decade. No way. You mean to say their anti-poverty program is not working? No. Wow. So what is the poverty rate of SF now? Poverty rate. 10.6%. Wow. I mean, that's still on the lower side, but still. All right, what else here? Still selling off going into NVIDIA earnings, huh? Yeah, we're about to lose 89. Dude, what the hell? AMD, NVIDIA, yeah, Google. I mean, I love Gemini, but wow. Wow, dude. Yeah, Supermicro, we know fundamentally why Supermicro and Target are falling. We know the fundamentals there, and they're justified. The Netflix fall is hilarious in my opinion, because Netflix financials are amazing. And so this trend line will probably continue for a while, mind you. I wonder, are we... Dude, we're under the 200 DMA. The 200 DMA is 113 right now. Let's do a retracement on this. But where am I going to pin it to? Honestly, I have to go out to the week chart to pin this to something. I guess I could pin it to the 22 low. I mean, that's going to be a pretty wide retrace, but F it. All right. 134.12. Oh, nice. It rubber banded to that. 1627. Let's make this... Oh, but that's where we are. Look at that. Holy smokes. We're literally on the line. The line is 109.94. It's literally where we're trading. Oh my God. Wow. And I think I have another line from pre-split. They don't transfer over. 1088. So I have a line at 1088, which would be, if I translate that over, it would be 1088, 1088. There, it'd be 108, right around here. So, interesting for Netflix, huh? Wow. Wow, wow, wee, wow. Okay, all right. Recession doesn't care about fib retracement. Everything goes to shit in recession, my friend. Except house hack. We're gonna go shopping, dude. Like, let me see MSS. I just want to think about, like, let's just brainstorm this out loud for a moment, okay? I just want you to see my evil recession plan. Okay. Kevin's evil recession plan. Okay. If recession, take 80 million in real estate and cash, you know, house hack, and leverage to the titties, not tiptoes, to the titties with supported by cash flow from rents, which ironically are often more stable in recession and rising, higher demand, right? And then give me low rates, give me low rates. So now you take 80 and you leverage it up by, you know, 80 is going to represent 30%. So now you have a $260 million portfolio minus the 80 of already spent assets, right? That's 186. So I'm going to get $186 million to go shopping. In recession, house hack could potentially, no guarantees, don't sue me, bro, get 186 mil to go shopping. Wedge deals on that, you know, just wedge deals alone, it, you know, pops that up by about $40 million. That's almost, you know, that's almost 40 mil in wedges that we could generate, you know, by deploying that. And I mean, the amount of assets we would have would just be insane, because then you take 223 plus the 80 prior equals whatever that is. That's $303 million, and then you'd have debt with debt at 186. So your debt to equity ratio would be, oops, I guess the AI is not working. 186 divided by 303 equals 60%. But 61%, that's perfect. That's the recession playbook right here. Crazy, huh? So the amount of capital you could get your hands on with real assets. House hack recession playbook. All right. That's why I say, like, we're in a teeter-totter economy, and I'm prepared for either direction. So, somebody says, I can't take this plan seriously until you change the word to tits. Yeah, you know, I was thinking about putting big PP, but, you know, I chose that one. So, okay. There's Netflix on the fib we drew. That's funny. Full retrace over here on Circle, Lucid, DoorDash. There's a lot of money raising going on here. I mean, look at Palantir in just the last, what? Wow. It hit 222 at one point? Holy smokes. 222, 165 divided by 222. What is that? Oh, Palantir is now down 25%. Wow. From highs, you know, right? So, like, obviously it's still performing extremely well year to date. But that's incredible. All right. What else is going on in the world? Let's find out. Oh, an ad. A freaking ad. At the same time I go look. Fine. Fine. I'll change the channel. No problem. It's fine. All right. Let's see here. Palantir stock down 25% off all-time highs. Still up double year-to-date, though. Innovation. Okay. Cool. So... You know who's had some articles I want to catch up on? Is Zero Hedge. Let's see what they have for us. 3 reasons everything's been selling off at once. Your mom. Okay. Sign in. All right. So, first, don't underestimate the impact of the Fed's hawkish pivot. Kevin, what do you think about getting a HELOC for when shit hits the fan? It's actually hilarious you say that. So, free preview. Actually, it's free. So, I guess it's not even really a free preview because it's free. But if you download the Meet Kevin app, you could get the Daily Wealth. And you also get the archive of the Daily Wealth. Like, if you sign up for the email version, you don't get the archive. You just get the email every day, right? You can sign up for the archive of Daily Wealth by going to meetkevin.com/data. And it's totally free. You scroll down here and you click on right here. You put your email in the Daily Wealth tab. Remember, the NVIDIA coupon code for this, and could be a tax write-off, expires today. We aligned it with NVIDIA earnings day. Oops. Yeah, anyway. So, but anyway, the Daily Wealth, yesterday I talked about this. And I literally wrote yet, if you don't have lines yet, it might make sense to apply for them. I don't have any, but now I'm even starting to think about establishing the lines just to be prepared to pull them, right? So I think that's interesting. Oh, is X glitching out again with the video? I might just turn it off. No, it's only showing up. It's showing up 3 times right now. I honestly don't know what the problem is with Twitter. There's some kind of streaming issue. But anyway, somebody says Enphase. Enphase, they're pissing me off. Like what they're doing from a fundamental basis. They're getting involved with the power purchase players. It's a terrible idea. Horrible idea. Horrible. Yeah, X crashed yesterday because of Cloudflare. Oh, I forgot to say, by the way, because I was talking about House Hack, please make sure to, if you are ever at all interested in investing, please always make sure to read the offering circular. This video and live stream is not a solicitation. There's risk with every investment, blah, blah, blah. Dude, I almost forgot. You can't forget this stuff, Kevin. You need to get in trouble. First, don't estimate Gavin Newsom's watching. Did you know Gavin Newsom basically sent the California police after me for doing fundamental analysis during a 32-hour live stream, and then they fined me $5,000. Thanks, Gavin. That's while I was running for governor. I'm like, thanks, Gavin Newsom. Like, that's not political weaponization at all. It's exactly what it is. Anyway, so why is everything selling off? So it says here that if we look at the biggest multi-asset sell-offs of the last decade, Allen notes consistent themes being the Fed adopting a more hawkish posture and turning to rate hikes. Yeah. Packet Watchdog says, on a mountain of cooked sulfur right now with my 2 Bitcoin futures. Bro, you are making me want to play Rust so badly. We saw that in 2015, 16, 18, 22, with the latter being the biggest combined equity and bond sell-off ever. Right, because everything's going down, right? Like, Bitcoin's down, okay? What about gold? Gold is down from its peak. What about treasuries? Treasuries are down from their peak because yields are up. Let's see. These pressures are likely to persist given that inflation is lingering above target. Yeah. And then they make a mistake. Leading indicators like ISM remain strong, which is bad. Second, we've had a relentless, historical, unusual rally. We've had a Nike swoosh, bro. Dude, I know. The old school RuneScape sailing update today. No, I can't, dude. Because if I open the sailing update, I will do nothing. I will get nothing done. That's all I'll do is try to like race to be a top sailor. I'm not doing it. I can't do it. Instead, I'm going to go to the bathroom. I'm not going to log into RuneScape.
Companies are representing that publicly. Yes. To your point, though, I think other states are trying to emulate the New York legislation. We would love nothing more than greater transparency on this front, because I think there's a lot of fear, there's a lot of misinformation, and that would help us really sift back from fiction.
Bloomberg's Seth Figgerman, thank you very much. Let's get to another top story. Meta has secured a key legal victory against the Federal Trade Commission. The FTC alleged the company's purchases of Instagram and WhatsApp violated antitrust law. A judge didn't agree. Bloomberg's Riley Griffin joins us with the details. I think let's start with the basic legal reasoning that the judge gave. What was the decision based on, and what happened?
Well, Ed, you have to remember that when the FTC first launched this lawsuit, that was 5 years ago. That was Trump 1.0. The social media landscape has changed drastically since then, and that was really the reasoning behind his ruling. The FTC had argued that MeWe and Snap were its only competitors, and you and I have spoken plenty of times about what TikTok is doing to Meta's market share. That's what Judge Boasberg said as well.
Then Meta gets up and says, see, we have got so much competition. It's fierce out there and continue to tackle it. It's an interesting sort of argument to have to make to your investor base, your employees, that you are under threat in some way.
It's such an important point, Caroline, because really this win is also a warning. Looking forward, Meta is going to have to grapple with Judge Boasberg's comments, which are that it is not differentiated from its competitors and that TikTok is eroding its market share.
This is probably then the most difficult question, but what happens next? Is that just it now? It's all done? Or there are some changes that Meta has to make? Or there will be more legal challenges down the road?
So we've been speaking with analysts. Nobody expects the appeal process to proceed, but we're going to wait and see. Really, this means that Meta doesn't have to spin off Instagram or WhatsApp. That was the overhanging threat. But a big win, one that was really priced in. Analysts had expected Meta to take the W here.
Bloomberg's Riley Griffin has been all across this story. Thank you so much. Meanwhile, coming up, we're going to get back to the NVIDIA earnings. Of course we are. Wall Street is awaiting AI signals. We await an exclusive conversation with Jensen Huang that Ed will conduct. This is Bloomberg Tech.
All right, perfect timing. I actually also brought my calculator back, finally. Violet, she took it with her a few days ago when I took her in here. And I'm like, man, I missed my calculator. Should just buy another one. But no. Second, we've had relentless on an historically unusual rally. 6-month rolling basis, the S&P 500 has just seen its strongest performance since the COVID recovery of 2021. And today, I bet you that's all fueled by debt. Third, persistent flare-ups around public financing are continuing to weigh. Right, basically debt, not just bonds, finances. I mean, this is the debt question. Okay, looking forward. Deutsche Bank strategist predicts these headwinds are set to be around for some time, but the backdrop is still fundamentally robust. Allen concludes, fundamentals are very accommodative. Even the bursting of the dot-com bubble took place over into a broader macro slowdown and not in isolation, so the drivers of market resilience remain in place for now. Yeah, show comments. All comments, premium comments, best comment. Okay, so the Fed is hawkish. 225 cuts last month. Yep. Okay. What? Conditions sound ripe for tightening. Another bullish article. I'm shocked. Please find something else to do. Fed is clueless. Japanese bond market. All right. Here, I forgot. How are we doing on BT right now? Well, the Qs are only up 33 basis points. And Nvidia, yeah, still bleeding. Wow. Wow, Tesla. Come on, man. This is supposed to go to 414 today. Yeah, but look at that Bitcoin drop too. All right. So, 0. NATO scrambles jets. One of the deadliest Russian attacks on Western Ukraine. Yikes. Yeah, they're pissed because they got hit by long-range missiles from Ukraine. Trump lifted the ban on that. Heavy systematic selling. Everything was looking awesome an hour ago, but sellers have reappeared at scale. Goldman Trader points to dramatic systematic selling. Triggered a flip in short-term momentum. Last time markets breached this in mid-October, and we haven't experienced since then. Okay, supply to sell, blah, blah, blah. Let me look at the, let's see if I can find the Goldman notes. Oh my goodness, what do we have to do? Let's see. Goldman. That's probably over here. What matters today? Equities. Positioning update. Everybody's talking about Nvidia today. Everyone. Klarna. All right, it's gonna be one of these. So here we have stocks, bonds, focus on commodities, oil, not gas. I don't care. Today's events, big deal. Investment banks. A more attractive entry point. Recent sell-off. Government shutdown ends. We believe the recent sell-off in investment banks creates an attractive entry point. Man, I don't want to touch banks. That's gross. Ew, who wants banks? Here's a piece they had on Klarna. They say, impressive Q3, transaction margin ahead of the numbers. Klarna retained 100% of its fair value financing volume on balance sheet, which requires Klarna to reserve future credit losses. Man, yeah, I can't believe they're keeping all that stuff on sheet. I don't want to invest in debt right now. That's scary. Not that kind of debt. Nvidia setup could be an inflection point for investor sentiment to improve. Well, that would be nice. Like, what if Nvidia is the setup to actually keep things going positive, right? That would be nice. NVIDIA numbers typically hit at 420, conference call at 5. Stock is back to the same level it was before the last print. Rapidly digesting news flow. Okay, we expect NVIDIA to deliver a beat and raise quarter. I mean, I think that's what everybody thinks. And that's always the problem, is everybody's expecting that. Let's see. NVIDIA option volume, stable. Amazon stock is down 10% in 5+ days. Huh. Microsoft down. With EPS up. Large AI infrastructure companies enjoy large balance sheets. Yes, they do. Old news. Some AI platform stocks have outperformed year to date. Snowflake, year to date, 66%. Really? What are they, like 200 now? 253. Wow. Good for Snowflake. Wow. Okay. Oops, where were we? Here we go. AI productivity beneficiaries. Well, that's boring. What do we got over here? AI productivity beneficiaries. Stocks with combination of high labor costs and high exposure to AI automation. Share of wage bill exposed to automation. Oh, they're basically ranking these companies by like how much of their business they could automate with AI. A lot of banks, a lot of finance. There's a firms in there. In other words, where could they potentially save money? Yeah, that's interesting. I always, the problem is when institutions start requiring this and then companies start firing, it creates some potential problems. Rocket, RKT's in here. Yeah, I believe that. AI is huge for these finance plays. I wonder how the mortgage plays, 10-year yield is up, so the mortgage plays are probably down, which makes sense. Housing numbers point to unusually strong buyer's market. There's a catch. Let's go. Bonds. Yeah, 4.1 shouldn't be too good. How are the mortgage plays doing? Figure 36, RKT 17, LDI 260. Wow. UWM. Oops, supposed to be UWMC. United Wholesale. Yeah, they've all come down quite a bit when the Fed started hawking here. Since it looks like peaked out September 7th. Wait a minute. That's exactly where we peaked out last year, isn't it? Oh my gosh, dude. To the day. Look at that. September 17th, 2024 when Powell hawks. And then over here when Powell hawks. That's freaky. September. Yep. Wow. Just straight off Powell hawking. So really, if you look at this, that's actually fascinating. Let's screenshot this because it's so remarkable. So Rocket and Loan Depot, both of them. So and pretty much United Wholesale. But we don't need more screenshots to evidence. Okay, so let's think about this. Okay, so arrow. Let's go red. So September peak here and here. And then let's go with both peaks when Fed was most dovish. Peaks crashed when Fed turned hawkish. Right? So data improves. Sept 2024, November election, boom, stock bleeds. And then here in 2025, you know, we'll call it Oct 2025, Powell throws water on Dees cut. So if this pattern holds, okay, this is the interesting part. This is where the money honey is. If pattern holds, mortgage co's should skyrocket when Powell Fed realize realize they've made a mistake and need to cut rapidly. You know, right, if we get to that. If we see layoffs spike. So if we continue to see layoff data moving up, like what we're seeing with, you know, the Challenger plan announcements, you know, Challenger layoff plans suggest this is likely, right? But obviously that's just one data point, right? But that's interesting because that really gives you a play. Although everything goes down when the market goes down, that Fed freakout could be fascinating. So I'm gonna jot those down. So next Fed meeting is Dees 10. So really, you want to play the mortgages, you have to play the Fed. Let's listen to this remote.
You can see that Mubadala itself also has significant holdings in Bitcoin ETFs. They've set up new funds such as MGX that have done deals with crypto exchanges like Binance. And you can really see that, you know, they see this as an important long-term diversification play.
And how significant would you say Abu Dhabi Investment Council's move into the crypto sector is, not just for this entity, but for the region at large?
Yeah, well, look, it really gives it growing legitimacy. You know, there's been a lot of questions about, you know, institutional interest in it. Is it here to stay or is it just a fleeting thing? You know, we do see a lot of sell-offs in the Bitcoin ETFs recently as investor sentiment has turned. But it looks like the Abu Dhabi Investment Council is going to be in it for the long term. And this just really gives it legitimacy when, you know, a state-owned fund by one of the richest countries is plowing some of the reserve money into this. You can see that this is something that they really believe in.
Right. I think most people have heard of Mubadala, which you mentioned is the sovereign wealth fund. What exactly is the relationship between the Abu Dhabi Investment Council and Mubadala? I know that you said it's a unit of it, but how did that develop over time?
Google and Nvidia still selling down. Qs are only up 22 basis points right now.
And, they're mostly invested in private markets, particularly in North America. They've since been trying to diversify. A few years ago, just to sort of simplify the management, they were folded into Mubadala, but they're still run very separately. You know, they have their own investment strategy that...
Oh, Burry tweets. Oh, hold on. Children. Close the door, Kevin. Oh. Oh. Oh my goodness. But it's Baidu. 2021, useful life. 4 moved up to 5 years. 2024, 5 moved to 6. Took an impairment. Had CapEx. 2024 net income rose 50% as a result of useful life change, of course. What's his point? His point is the reversal. Wait, holy shit. Is this Michael Bird? No, this isn't his account, is it? This is his tracker. Oh, okay. So where's his? Is it his at Cassandra? At Cassandra. Is this his account? No, it's not. Because this is the tracker, right? Yeah, buried tracker. Account copy. So where's his actual one? I don't know. Is it this one? Oh, yeah, okay, good. All right. This is where he said it. All right. This is more like it. All right. The engagement is accurate here. Grok, explain this to me like you're Ryan Gosling in the film The Big Short. All right, picture this. I'm Jared, breaking it down for you. Baidu's servers, they said last 4 years, then magically 5, now 6. Why? Stretch out depreciation like paying off a car loan over extra years. Expenses drop, profit pops, net income up, the trick alone. But here's the kicker. They wrote down over 50% of their assets, the impairment. Tech's evolving fast. Old gear's junk. Steady capex, but depreciation only 6.8. Sounds like papering over cracks. Yeah. All right. I mean, he's just sort of doubling down on his argument. Nothing new here. Yeah, he blocked me because I sent him the an eggplant emoji. Chamath blocked me for asking why he paper-handed Virgin Galactic. Yeah, you know, really, I really know how to push the buttons, I guess. The AI bubble is bigger than you think. Your mom's bigger than I think. Ho! Okay, banking charters. Everybody wants to become a bank. Last month, the big focus was round tripping. The way that sundry AI and tech companies were investing in their own customers. NVIDIA's doing with AI, blah, 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 blah. Shadow banks. Ever since the advent of financial regulation, companies have been attempting to evade rules with creative branding. Private credit companies and non-banks try to rebrand into a name that doesn't tell everyone they're an unregulated financing vehicle. Yeah. Cody Zillow article, home person. No. Zillow. Let me see what the details are there. Last sales are rare. Past years that measured by Zestimate. Loss of value. Major metros. Okay, so home value slid in Denver, Austin, Sac, Phoenix, and Dallas. Oh, that's interesting. And then this is Zillow's analysis. Sharp contrast, 55, Scranton, Des Moines. Oops. And then front pay home values. Interesting. The Denver market. Denver market, I've been seeing softness there. I saw softness there in 23. We visited a lot of the Denver market. So if you go out to, let's see here. Let's go to Denver. Remove boundaries. I want to see what's going on. This would be a little bit of a tell for me. Not all the way out to Boulder. Here. Broomfield's a sexy, sexy hood. I like this hood. So let me find something here. Let's go comp something and we'll see. Let's go comp this hood. For you. Okay, fine. So let's comp this hood and see what's happened. Close enough. There we go. And let's go to, so right now we're sitting at 575 for 2,500, 2,500, 580, 2,500, 615. So high fives for 2,500. Okay. Now let's go to solds. And then let's go to last 90 days. What's actually selling? Interesting. So 615, 660. That's good on the remodels. Wow, that's a two bedroom. 500K here. Well, it's all over the place, huh? So let's take a look at this. 515. Yeah, so it looks like for a basic property, you really got to be 5s in this hood. Interesting. You kind of see that evolution from peak. What did I say? 23. That's funny. That's like right about here. How interesting. Anyway. All right, I'm bored. Let's go back to where we were. Where was that AI article? So, speculative financing, AI build-out, assets under management hit 1.6 trillion in Feb, likely higher today. Deals being made are perverse and irrational. There are huge mismatches between the life cycle of assets being funded and the amount of time it will take to pay them off. Experts have been doing everything but picketing the stock exchange, saying bubble in progress. AI build-out. Sealed the deal on another financial crisis. The question is size. Yeah, and when. Build out of computing needs to justify $2 trillion in revenue by the end of the decade. That's an insane amount of money. Nobody has it, and people may never have it. Well, that's what I think. I think I'm going to run a survey for you. How many of y'all, can you check my property for me? Simer, what's the address? How many of you actually pay for AI versus not, versus just using the free? So I'm going to run a survey. And we're going to do... Time to change the title of the stream. Okay, stocks explode. Then dump. There. Okay, let's run this poll. Start a poll. Do you pay for LLMs chatbots? Yes, 200 a month or more. Yes, only 20 a month. And then no, only free. Okay? No asterisk gang. If you are a software engineer and you pay for it, you pay for it. No lying. All right. In the meantime, I would say nobody ever have data centers, AI data centers, blah, 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 blah. Big tech companies have large cash flows, but trillions needed or even too steep for them. Venture capital isn't interested in funding. Blah, blah. But investors are dying for any kind of investment opportunity, believing that big tech-directed industrial policy will endure for years. Companies are now borrowing. This is old news. SPVs, old news. Coffee. Okay, private credit, body. Bulletproof trade, blocking redemptions. But if it's the case, why is okay. It's pitched as a bulletproof trade, but if that's the case, why is Blue Owl, in the aftermath of the merger of its two private credit funds, blocking redemptions that will automatically give those investors 20% losses? Right. I mean, this is true. This is true. It's not limited to Blue Owl. Covenants in corporate debt are gradually being rewritten. Private credit winter is coming. Ooh. Did I see this article? Ooh, maybe I didn't. Here are the facts. UBS, First Brands, blah, 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 blah. Private credit has grown so fast that audit frameworks can't keep up, leading to structural weakness. Okay. There's no better leading indicator than real-time covenant changes, which show where the smart money is quietly hedging. Right now, smart money is fortifying against the downturn. Yeah. Lenders have started to close off liability management loopholes. the J.Crew blockers, the anti-PetSmart, preventing shifting valuable assets. Lenders have been focusing on closing off liability management escape routes. These are just fancy ways of saying, you know, things are tightening. Don't confuse deal volume with market health. Rising issues can mask deteriorating standards. Second, collateral frameworks. Third, treat the trends as early warning signs. Yeah. I think this is a good definition of what's going in the on in the market. You know, people are fortifying. I think that's actually a brilliant way to put it. A fortification. Trump, 270 billion in agreements and sales are being signed between dozens of companies today. That's cute, Trump. I'm just watching the headlines. Okay, cool. Mm-hmm. One sec. All right. Okay, so what was my poll result? Oh, you bums. Wow. I'm ending the poll. I'll give you another 30 seconds to vote. I'm going to end the poll. Dude, that's crazy. So 645 votes in 4 minutes. That's kind of cool. Oh, that's a perfect place to end it. Hold on. End. Did I get it? Did I get it? Did I get it? I think I got it. I think I got it. Did I do it? Did I do it? Did I do it? Where's the stat? Yeah, I did it! 67% of you are free. 67% of you do free. 28% of you do the $20 a month one. And 5% of you actually do the $199. You never answered if you pay for AI. Sure. Yeah, no, I do. Because I just test them all. You know, I've paid for Perplexities, $200, I canceled it. Paid for GPDs, $200, on and off, I cancel it. Gemini, I paid $20 a month for. I don't see the need to upgrade on Gemini. So, you know, my take is, if the baseline gets so good, you don't need to pay at all. LLM comment. So, if baseline LLM gets very good, no one will have to pay other than, you know, a fraction of researchers or coders. So, like, everybody will just, it'd be like having Wikipedia, you know? They're going to turn into Wikipedia, you know? Pay for ad removal. Kind of interesting. Yeah, we already went through Burry's tweet. I don't care that Trump is live. Dude, I fall asleep every time I listen to Trump. It's so boring. Oh, look at this beautiful place here. These photos suggest it may have fallen through escrow before. New construction scheduled for completion 2026. Oh, well, you have an option on it. You know, if you go into recession in the next 2 months, you can always cancel. Built in 2025, yet scheduled for completion in 2026? Sounds to me like it wasn't built in 2025. Although it looks pretty done. Yeah, it's cute. I mean, it's new construction. Good for you. Now, what's the resale value? This is a half of a duplex, right? This isn't a whole duplex. It's just half. Oh, the photos of the listing are a neighboring property, I see. Duplex multifamily. Well, it says... Well, how many units are you actually getting? 5 bed, 5 bath. Oh, okay. So it is the whole. You are getting a duplex. Okay. Well, it's always harder to comp a duplex. Always harder because you have to do per unit cost basically. But this is where they're going. I mean, you're comping to the existing neighborhood right here. But you know, if you zoom out, what do you get for multifamily? These significantly older properties. What is this? What are people paying per door out there, basically? What is this? This is a, no description. This is a nice opportunity to own a duplex. 2-in-1s on each floor. Okay, so $270 a door. I mean, you're getting new construction, but you're paying $350 a door. All right, so you're paying a lot more. And then over here, you have to walk. So your downtown's over here, so you've expanded. Oh, I want to live in Blackwell. That sounds cool. Yeah, let's go move to Blackwell. Well, let's go back a little bit more here. Can I not? We're probably on 90 days. I'm going to have to go back. For multifamily, I'm going to have to go back a little more. All the existing old duplexes on this side, they sell for a fraction of what you're paying over here. So you're definitely paying a premium for the new construction. Because look at them. I mean, how many units is this? This might be more units. 635. How many units? Is this a triplex? No, it's a duplex. Okay, well, that's the first other one that I've actually seen at $300K a door. And then what do I got over here? 2 separate units, $225 a door. What is this? $469. This is a this is a single family. Okay. Well, townhouse style. Interesting. What if I go, let me see what's for sale out here. Or I'll just look at, you know what, let's go look at, I'll look at the sold, like what does a single cost me? Oh, wow, the houses are actually cheap over here. So you're paying, remember, you're paying $375-ish a door. Wait, no, you're paying closer to $350 a door at $690. So, you know, I could get houses for $260 over here. Look at this. Dude, that's a new construction house for $275. No, it's a remodeled house. It looked new construction. Yeah, they made that look good. It looked like one of those small homes, the tiny homes, you know? But like, dude, if I could buy single families, detached. Look at this. I could get a beautiful house for less than you're paying per unit on the new construction. I don't know, man. That's going to weigh you down. I mean, maybe these hoods are different, right? And these are larger. The smaller homes, $260. Ooh, $1 million home over here. Oh, that looks cute, doesn't it? Look how nice of a yard. This is cute. Nice older home. Oh, look how beautiful this backyard is. That's very nice. Very peaceful. I love this. Very nice. I love the porch too. Man, nice. That's cool. Very nice. Sonny says, literally no one wants to live in that part of town. Well, which part? Am I using Gemini Free Pro? But not Ultra. I pay the $19 or whatever it is. Okay. So takes time to cook the numbers. Yeah, thanks Max for the data on the dates there. Great paper from Let's add additional alarms. Data centers are not lasting infrastructure. Or at least the guts inside them aren't. If GPUs are working overtime to compute AI models, they may not last more than 2 years. High-end AI firms will want to upgrade to the latest version anyway. Yeah, everybody sort of disputes this with, oh, but old, 7-year-old chips are still working. AI firms are extending their depreciation schedule. Give me your link, Simmer. Blah, blah, blah. Did I mention securitization, data center rollovers from construction loans, asset-backed securities, risk comfort? 61% of applicable securitizations are coming from data centers. But again, securities are happening, these securitizations are happening in depreciating assets. I mean, this is the Burry argument, right? Chinese models were more efficient in AI training. This is a good, like, bear summary. While this pile may be centered in private credit, a Moody's report says banks have at least 300 million loans to private credit. Bank has acknowledged, Deutsche Bank has acknowledged that some of its traders have gone heavy on financing. Arlington, Virginia. Hot market, says someone. That DUPEX is close to a build-out neighborhood. Richmond, yeah, neighborhood by neighborhood. Well, I know, but my problem is that's the downside with new construction. You buy new construction, you're sort of on the edge of the old neighborhood. You're gonna get dragged down, right? No company is gonna be immune to the bursts of AI bubble, says the CEO of Google. I mean, this is true. All right. I mean, that wasn't anything new. The American exceptional trade is wobbling. Darker mood. Oh, did Burry just post it? We just looked at Burry. Oh, early is not wrong. Literally. Because this is what we looked at. And I guess he literally posted again. Buffett revisited. Okay. Let me turn this into a PDF. Let's see what Burry said. Open, PDF expert, create PDF. After recently purchasing Apple, I encountered some heat from fellow value investors. Part of the reason is that I considered Apple below $34 a Buffett-like stock. That's funny because, you know, Buffett ended up buying Apple eventually. Okay. I compared Apple favorably to the potential of several Buffett favorites just prior to their huge runs. That's funny. That's great. Notably, Apple is recently trading in the same range for 11 years. Coca-Cola, American Express, Disney. What makes it a Buffett-like stock? The intent here is not to defend or even discuss whether Apple is a Buffett stock. The intent is to address a common misperception. Buffett's success somehow validates the theory that good businesses are priceless. Gillette is not worth whatever Mr. Market asks. Neither is Coke, American Express, or Disney. Historical share price performance is absolutely no way adds additional value to the current stock. That's true. Intelligence, the average investor, should reflect what differentiates it from Buffett. Following the crowd, buying what's popular, and buying what's widely known as a good business will not yield Buffett-like returns. Buffett's current investments are known well as great businesses. That was not always so. Investing into... Okay, so Burry's basically saying, like, there's a limit to how much you could pay. So we'll call that, you know, Burry's latest rant on value investing. Wait, they're delaying the jobs report to after the Fed meeting? You gotta be kidding me. Oh, my Lord. Previously scheduled release, revised release. Holy crap. They canceled it. What? They canceled October? Are you kidding me? Are you kidding me? And that's after the Fed meeting and they're canceling October? BLS will not publish October data. Wow. Wow. No freaking way, dude. Oh my gosh. Before the Fed meeting as well. No way. October jobs data canceled. Nothing to see here. Everything is fine. That's my tweet. Go like my tweet. October jobs data canceled. Nothing to see here. Everything's fine. Dude, I'm pissed. Oh my gosh, dude. Because I don't... Like, remember, Trump fired the head of the BLS. And now all of a sudden the new person goes, oh yeah, you know, sorry. So establishment survey data from the current statistics for October will be published with the November data. I mean, that's fine because they're just collecting the November data. It's the November jobs report, right? Because you're going to get a new survey. So you're basically killing the whole October report. Household survey data could not be collected due to the shutdown. Household data is not retroactively collected. Yep. Yeah. That's crazy. So one less catalyst. I wonder what's happening now to rate cut bets. Dude, I gotta go pee again. Hold on.
Of what the outlook looks like in terms of artificial intelligence. Of course, we also have investors that are still digesting a lot of the headlines that came through from the U.S. Saudi forum here, where we know both Elon Musk and Jensen Huang spoke here. But moving over from chip makers into the land of the consumer, we're looking at shares of Lowe's. Those are in focus. Shares up about 5.7%. This is after the company topped expectations in terms of profit. This is a different story than we saw from its competitor Home Depot just yesterday, saying that we were seeing consumers not really coming out for big ticket items. We are hearing from Lowe's that the consumer is really spending in terms of home improvement. So this is just giving us a broader read on the economy and what's going on in terms of jobs growth and the consumer spending here. Home Depot, of course, did point out weakness in terms of tariffs and others of the sort, but we are seeing Lowe's, of course, getting a nice bid here, up about 5.8%. And lastly, let's end things off with Target. Sticking with the consumer theme here, we are seeing shares lower about 2.4%. This is after the company trimmed its full year forecast. And we did see markdowns and soft demand from the company. This has really just been a tumultuous time period, of course, being laid out before the incoming CEO will be taking over the reins here. But we did see a lot of these pressures and lagging demand here in terms of a lot of the key merchandise areas here, Scarlett.
All right, thank you so much. Bloomberg's markets correspondent Norma Linda with our individual equity movers. President Trump is speaking right now at an event in Washington. He's touched on a range of topics, including the Federal Reserve and his pick for the next Fed chair.
Secretary Scott Bessent, who's been fantastic. Where's Scott? We're thinking about him for the Fed, but he wants no part of it. He likes being Secretary of the Treasury. I think we'll leave him. So let's cross your name off, right? Officially, right? Remember, you said that. I love the Fed job. To me, it's the easiest job in the world.
All right, let's bring in Bloomberg's John Harney in Washington. He's a Bloomberg News editor. John, just give us a wrap up here of what we learned from President Trump in his comments and put it into context for us.
Well, this was the second day of good times between President Trump and Crown Prince Mohammed bin Salman of Saudi Arabia, who arrived yesterday on what was what was said to be not an official state visit, yet the pageantry and grandeur could not be avoided. So it involved a lot. This session at the Kennedy Center that you described was intended as a Saudi.
Oh, I come back and what do we have here?
Lost the lead.
Yeah, Q's just lost the lead. Oh, we're about to lose 89K. Holy smokes, look at the reversal. Oh, back to 590, the freaking line, bro. Maybe if I just delete the damn line, we won't keep going back to it. This is the same bullshit that happened yesterday. Look at it, dude. All damn day yesterday. 595, 595, 595. What do we have today? 595. Mind you, this is what we said pre-market yesterday. Pre-market yesterday, we're like, boys and girls, 595. I literally called it the most critical line. And sure enough, the next 2 days, it's all 595. If you don't have the alpha report yet, make sure you get it. You know, we're pre-market doing fundamental analysis and technical analysis, you know, for like quite a while every morning. I think we've been averaging like hour-long streams and, you know, some pretty good analysis and data. Anyway, dude, that's crazy. Okay, so we now have, let me see here. I want to see what's going on with rate cut bets. Yeah. Okay. This is bullcrap. So keep in mind the household data is done usually by phone calls, and the payrolls data are like mailers. So the mailers can keep coming in. So they have October data, maybe not households. So they could issue a partial report. And they're basically saying, yeah, we'll just, you know, loop in some of that into our revisions for November. But that now puts them after the next Fed meeting, which is a pisser, because now you're going into this Fed meeting without the data. This is crap, man. Ugh. Let me see what I can see on rate cut bets. I don't know, my stupid button's not working here either. Let's see what's going on. Let's go world interest rate. We are looking at, oh my God, 32% chance of a cut now. It freaking tanked. Holy smokes. This is because this is like the Zero Hedge article. Wow. It's all Fed bets. So that means mortgage plays should go on sale based on the analysis that we were just doing. Okay, why is this crap not working? Nope. Yo, what the hell? Who broke my stuff? I hear it. Who done it? Who done it? You done it? Alright, whatever. It ain't gonna happen. Alright. Just manually do it. Data dependent. Yeah.
Data dependent.
Oh! Right at the 595er line. 595, 595. Inbound full stop. Taxi via Foxtrot. Bro, 232 gets smoked as well. 89 gets smoked. Tesla, smoked. Holy moly. Damn, bro. Damn it. Damn it. We just want the data. Stop hiding this from us. That's all this is. They're sucking up to Trump. Absolute bullcrap. So let's see here. We did. Let's do a. I want to get. We did the WAPO. We saw the journal. Where was? Economist, which was interesting. We saw the AI bubble talk. We did the BLS. We have yeah. And then there wasn't really any Fed speak. Okay, that's fine. So where, oops. Oh, this is the Times. The New York Times. This is, all this, by the way, is coming at the same time as you got this article on Times. Let me see here. Oh, wow. Steep tariffs issued in August led to contraction in imports. Right. So we're importing less. President's sweeping tariffs took a toll on imports of goods and services, which dropped 5.1%. The data, which incorporates less than a month of new tariffs, illustrates the sharp increase in trade taxes. Scrambled life for international businesses. U.S. firms clamped down on purchases of foreign machinery, pharmaceuticals, telecom equipment after months of stockpiling. Roughly half of the drop in imports was because of a decline in purchases of gold. Costco. U.S. exports fell. Because of the fall in imports, U.S. trade deficit dropped sharply. The data, yeah, but this hurts GDP ultimately. Wait, hold on a sec. GDP minuses imports. I mean, it hurts the economy because the velocity of money goes down. But in the equation of GDP, we take out sales tax depreciation. Let me see here. Plus exports minus imports, right? So if we're importing less, we're pumping GDP, right? Okay, so ironically, this artificially inflates GDP because imports are subtracted from GDP, and problem is that may lower productivity, capex, and velocity of money / investment, right? So eventually it comes back to hit GDP. Because of the fall in imports, okay, we saw that. Liberation to tariffs, imports, sharp drop. Let's see, blah, 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 stepping back. Recent drop looks steep, largely because of the threat of tariffs. Surging imports ahead of, resulting in a fall of imports after. Stockpiling. Blah, blah, blah. I don't think that's great for the economy. Oh, Q's just went green again?
Gained the lead.
Q's are green again? Let's go. Dude, don't tell me. Oh, my line! Oh my gosh! That's our Alpha Report line! This is an advertisement for coupon expiration!
Coupon code expiring soon. Coupon linked below.
So if you want to get yourself a tax write-off before the end of the year, why not invest in yourself and your education by joining the Meet Kevin Alpha Report at meetkevin.com. You pay once and you get lifetime access. meetkevin.com. Okay. More worry. So then we have the Burry letter. Oh, look at Goldman Sachs. Look at what Goldman Sachs says. We estimate that the October non-farm payrolls would have been negative 50,000. Bro, you can't tell me it's not rigged now. Largely reflecting the 100K headwind from the government layoffs. Wow. From the government resignations. Wow. They perfectly dodged it with this data. That's insane. So, Trump says interest rates are too high. Well, you're not helping. Goldman Sachs forecasts negative 50K jobs report for October, which is now canceled. Trump basically gets to hide all Doge layoffs from data. That's wild. And the Qs are losing the lead again. Okay. Jobs canceled for October. November data delayed to after Fed meeting. It's crazy. Who wants to play Red Alert?
Chew on this!
You are not prepared.
Uh-huh. Okay. Jesus, man. Oh, goodness gracious, dude. Okay. And then what about JOLTS? We will not publish a September JOLTS report. Data from September will be published with October, which is even later. So JOLTS canceled. That's canceled. And then we won't get that until December 9th. That JOLTS report at least we'll get right before the Fed meeting. Damn, bro.
Data that the Fed is always looking at. We in Bloomberg Economics constructed our own alternative data-based labor market index that shows that right now the labor market, broadly speaking, is about one standard deviation weaker than it has been historically.
Got it.
And if the Fed is considering that same data set, and if the Fed is looking holistically at the labor market, it's going to at least give the Fed cover to cut rates, even if not every member is willing to make the decision to cut.
And I'm glad you bring that up because that highlights the division within the central bank. President Trump making comments right now saying that interest rates are too high. This is something pretty...
Thanks for the $10 donation there. Let me look at this. I don't know. This is a little gay. Grindr owners scramble for private buyout after stock crash. See what I did there? Anyway. Grindr controlling shareholders are rushing to take the LGBTQ dating app private after the stock decline triggered margin calls on their personal loans. Oh. Are you kidding me? The CEOs are getting margin called? You gotta be kidding me. Oh my gosh, this economy is so built up on debt. You've got to be kidding me. Oh my gosh. Oh, wow. $2 billion company. Oh my. Wait, so creating an unexpected financial crisis for the profitable company. Leveraged ownership structures can force dramatic ownership changes. Wow. Hate to say it. This is why your boy Kevin's got no personal debt, not a dime. House Hawks got no bank debt. I say it so that you know, put my money where my mouth is. I don't want debt right now. This is not a solicitation. If you want to invest in House Hack to get the 5% yield through conversion and the upside in the stock, read the offering circular and the solicitation. This video is not a solicitation. Grindr just became the largest casualty of leveraged ownership gone wrong. The LGBTQ plus dating app, majority shareholders are scrambling to take the company private after their personal financial bets backfired spectacularly. According to Semaphore's exclusive reporting, a former hedge fund manager now based in Singapore, James Liu, together control 60% of the dating platform, but their decision to pledge nearly all of their shares as collateral for personal loans has created an unexpected crisis. Seized? So they had their shares seized, and now they're dumping the shares. Grindr's business fundamentals remain solid. Profits jumped 25% in the second quarter. The app continues to be dominating. Appears to be completely disconnected from the actual fundamentals of the company. Well, let me see. Artificial pressures. Hate it when my stuff doesn't work. Now they're in talks with Fortress. Dude, Fortress, I feel like that's the last place you go. Why do I remember Fortress? Fortress just rugged somebody. Who was it? Oh, God. Who was it? Who'd they just rug? Oh, I remember this. Oh, I'm gonna have to use AI. I don't want to. Gemini. Who did Fortress, the lender, rug pull in 2025? Elon will call from margin for Twitter loans? Probably, honestly. Fortress. Few incidents related to Fortress. Brightline. No. I don't know. That name is so familiar, man. Who does the Fortress loans? Oh! I think it's Red Robin. Red Robin Fortress loan. I'm pretty sure it's Red Robin. Borrowings. Oh, let's go! From memory, baby. Oh, let's go. There they are. Red Robin takes a loan from JP Morgan and Fortress. Uh-huh. Yeah. That's where you go when shit's hitting the fan. Oh, wow. Let me go look at the fundamentals for Grindr really quick. So, Grindr, stock. I need to pick a color for this. Grindr. Let's go. How about we go like a color for Grindr? I think I'm gonna go with like poo brown. Okay. So financial analysis. 49 cents of EPS. And the growth rate expected is 16.23 plus 25.13 plus 25.52 divided by, oh yeah, plus 23.33 equals divided by 4. 22.5% growth rate. Okay, obviously a service provider. And let's slap that in here. Grindr, margin calls, very interesting. And they are owners going, there we go. Owners who control 60% are getting margin called and their shares seized / sold. That's poopy. Very poopy, actually. Control 60% are getting margin called. Put that right here. Okay, and then so what's their valuation? Grindr. Publish. 125 peg. Yeah, so it's come down a bit. Reportedly in talk with Fortress to finance them at $15 a share. Fortress now trying to get a loan from Fortress. Robinhood went to Fortress in 2022. IMO, not Robinhood, Red Robin, sorry. Red Robin. IMO, you go to Fortress when you're dying. Like, I feel like they're almost like a lender of last resort. Mm-hmm. Yeah. Grindr situation reveals how modern... Wow. I mean, that's very interesting. And it's somewhat of a tell as to what could happen when you have executives who just pull crap loads of debt on, collateralized by their company stock. Okay, a little bit of a bounce there on Goog and Nvidia. Oh my gosh, we're at just a 28% chance right now of a Fed rate cut in December. Oh, it's worsening.
More frequently. So it's also kind of helping Lowe's catch up with Home Depot.
So Lowe's and Home Depot, that's like a competitive pair. Then you've got Target and Walmart. Who is TJX's competitor, Emily?
Ross.
I mean, there are a lot of other discounters.
Ross stores.
I would say that Target and Walmart are potentially...
Really?
But like with these...
Dude, TJX has been killing it. That's wild.
Value when it comes to good prices, and I think TJ Maxx has really capitalized well on this shopper who is looking for a good buy.
Okay, watch out if they get into groceries then. Emily Cohn joining us from Bloomberg News along with Red Brown on covering these results from Target, TJX, and Lowe's. That does it for this hour of Bloomberg Markets. Balance of Power is up next. We'll give you all the latest headlines from the president in Washington.
Yeah, I don't care. Okay, so wow. All right. let's do a little summary here. Is it possible the Fed cuts now that has the market on edge not to cut? It's possible. Usually the Fed doesn't like doing that, though. Like, if it's 50-50, they'd go for a cut. But what you'll find is they'll talk first. They'll release some, like, press statement, or they'll give a speech or whatever before the blackout window starts. When does the Fed blackout window start? Fed blackout window. Oh, my God. Fed blackout window. Here we go. Here we go. November. Starts till 29th. So they only have until next Friday. So, I mean, that's interesting. Let's write that down. Oh, yeah, the zero hedge piece. Okay. Fed blackout window. Fed has until next Friday before blackout window starts on Black Friday. How appropriate. Somebody says Kevin sold all his Grindr stock. Yeah, got margin called. No, I've never owned Grindr. Okay. So, where's BTC regained 89 slightly. 28. We're gonna start working on Sudan. Saudi Crown Prince wants me to do something on Sudan. Okay. Okay. All right. Let's break this down. Well, it's official. The Bureau of Labor Statistics is canceling the October release of jobs data and delaying the November release of data until after the next Federal Reserve meeting. You would think that the Bureau of Labor Statistics, if they're going to skip an entire month of data, would at least try to hurry up the November data so they could give the Federal Reserve something. But no. As a result, markets are not very happy, now predicting only a 28% chance that we'll get a cut in February, which in my opinion increases the risk of a substantial policy mistake from the Federal Reserve. It doesn't help that Goldman Sachs is suggesting we would have had a negative 50,000 payrolls read if they actually released the October jobs data. That is a problem. You can see that right here. We estimate that the unemployment rate was unchanged. That's the rate on a rounded basis. However, looking ahead, we expect the October non-farm payrolls, this was written before they canceled it, to show negative 50,000. Now, of course, markets would have then added back in the federal government's job losses because a lot of these job losses would have were expected to show up in September and October because of the DOGE cuts in February. But the problem is the federal government has been one of the last legs that has been hiring. So a lot of people would have looked at, okay, well, even aside from that, how good would the jobs data have been? And unfortunately now with the ADP trackers and Challenger job reports suggesting that planned layoff increases are accelerating, and we're not getting the jobs data that would have been pretty ugly, you can't help but think, especially after Donald Trump fired the head of the Bureau of Labor Statistics for, politically motivated data, you can't help but think it's oddly convenient that Donald Trump and his new BLS head are just going to happen to cancel what would have likely been the worst jobs report of the year, October jobs data. Now, of course, they can conveniently just blame that on Democrats, even though Republicans totally dug in their heels, which they usually don't do. And then as soon as October passed and we were getting ready to get towards Thanksgiving, we happen to start making Democrats some promises, convincing, a group of 8 Democrats to essentially extend the government funding, some parts of the government all year, some parts through the end of January. And so all of a sudden you happen to get exactly what Donald Trump wants. Monkey see no evil. Nobody's going to tell me my jobs data is bad. Now you might be thinking, but wait a minute, Donald Trump would want the Fed to cut. True. But Donald Trump also doesn't want egg on his face with a giant negative jobs report, and he doesn't want the self-fulfilling potential prophecy of what happens when companies start realizing, must be okay to fire. Because as soon as that cycle starts, it doesn't end quickly. Now, of course, right now, artificial intelligence is propping everything up. I mean, we've got Michael Burry posting, another piece on X. Michael Burry's recent X post is this letter from 1999 where there's this discussion about how Buffett should buy Apple stock, which was very early for its time. But in it is really this argument that you really should, this is from Michael Burry, mind you, you shouldn't just follow the crowd and buy things because they're popular, because there's a limit to how much you could pay for a stock. And you should be aware of those limits. I mean, this morning, for example, we were looking, this was one of the fundamental analyses we were doing on the course member live stream this morning. We're like, this is terrible, for super microcomputer, along with looking at margins and otherwise. We were looking at Fastly and Target and otherwise. But I mean, and cat's out of the bag now. Usually I just keep this stuff for the alpha report. This is the kind of stuff we do fundamentally plus technical basis. We got a coupon code expiring, by the way, for the alpha report, meetkevin.com. Get your tax write-off, likely tax write-off. But anyway, we're like, wow, look at this. Listen, just let me read this to you because it kind of leans into what Michael Burry is saying a little bit. The $919.5 million revenue, or 15.5% decrease in net sales, was primarily due to the timing of several substantial orders that were only received in late September. So in other words, which they weren't able to ship in time. If they didn't get those September orders, SMCI would have had an even worse report. Like, their pricing power is shrinking, their revenues are shrinking, and it's weird because you hear this boom because of, Gemini, but it makes you wonder, is that boom going to continue to be broad-based? And this is something we were questioning as well this morning. When we look over here, we could see, Gemini 3's performance. And you can really go in 2 directions here. 1, companies fail and go bankrupt thanks to Google. Or 2, companies lash out and want to spend more. Obviously, the bullish theory is that companies lash out and want to spend more, but it also just increases the risk that you need more deficit financing, debt spending, to actually get XAI and OpenAI, profitable and actually get them to be competitive. Because right now, Google is destroying them. And they're going to have to take on even more debt. And it's scary. At a time where, really gay things are happening. I mean, Grindr, you've got a stock crash that's happening at Grindr, which is trading for a 1.25 peg, because literally the owners of the company that owns 60% of the company pledged all of their Grindr shares to take out personal loans, and all of a sudden they're getting margin called and they're getting their stock seized and they're getting liquidated because they're margining against their own company stocks to go spend personal money. I hate to say it, but that's also what Elon Musk is doing with Tesla shares. He's pledging Tesla shares to raise cash to try to pump Tesla stock by buying some. So you borrow against Tesla stock to go buy $1 billion of Tesla stock to try to pump the stock, to pump up the Tesla shareholder base, to get them to approve your stock comp plan so you can borrow more, so you could take that money and go invest it in XAI so you could prop up this bet against Google, and you're borrowing even more. It's scary. It's a lot of debt. It's a lot of debt. I mean, we were looking that the Grindr folks are literally going for bailout financing from a company called Fortress. And it took me a minute to remember where the Fortress Group came in. But the Fortress Group came in 2022 to provide a bailout credit agreement to Red Robin. You know, the burger joint? Red Robin. Yum. Well, guess what? When Fortress comes in, it's usually a bad sign that we're not ready for what's coming.
You are not prepared.
And it makes me nervous because, again, we're seeing more and more debt spending for likely what are probably going to be these commoditized products. At the same time, the jobs data is bad. I mean, 67% of you in my live stream refuse to pay for chatbots. And honestly, the base level chatbots are getting pretty damn good. And so now here we go. The BLS is rug pulling us on the October jobs data, saying they'll give it to us in November. But then that November data, they're going to delay until after the Fed meeting. So we're literally delaying jobs data another month. So we're going to get good September data. This has Trump engineering written all over it. Give us good September data and then go dark on the markets for a month so we could try to pretend that everything is fine. But people are seeing through this. And what's happening is they're starting to hedge. You know, I think it was in this article where we had, where they were saying institutions are basically starting to hedge against this. So, mind you, I want to just finish the point really quickly and then we'll look at that hedging article. The BLS will not publish the October employment situation. Somebody in the comments is like, oh, but Kevin, how could they? They didn't collect the data. Two forms of data. The payrolls data, these are job surveys that they keep coming in. It's like envelopes that show up or electronic surveys, they show up. Okay, that still comes in. But them picking up the phone and calling, that data doesn't get collected. So I understand that. But you could release half of the report. You could release the data you have. But they're not even doing that. They're just going to kick the can down the road until after the next Fed meeting. And so now you're at less than a third of a chance that you're actually going to get a Fed rate cut in December, which just increases the chance of the Fed making a policy mistake. Because you've got labor deteriorating, falling off a cliff. Donald Trump is hiding the truth of that data while at the same time demanding rate cuts. While at the same time, he's demanding rate cuts while the Atlanta Fed GDP is skyrocketing. We're at 4.2% now. Now, how do you put all this together? Because it seems like that's good news that GDP is going up, right? But GDP is going up in part because trade is plummeting. Imports are plummeting. Look, Trump global tariffs curtailed trade. Data shows. Imports of goods and services dropped 5.1% in August. This data comes out very slowly, blah, blah, blah. The problem with that is when imports fall, they artificially make GDP look high. So I think the greatest irony will be that we will end up having this really high GDP report because tariffs are falling or imports are falling. So you're artificially propping up GDP with AI spend and with a lack of imports. And the greatest rug pull is going to be us actually going into a recession. And then people are going to go, but Atlanta Fed said we were like 4% positive GDP. Oh, well, that's only because of the data abnormality of us having to, basically add back in the fact that we were importing less. So that just artificially propped up GDP along with artificial intelligence spend. Well, that's not great. That's a bunch of fugazi. So everybody's taking on more debt. The Grindr folks are going bankrupt. The Wall Street Journal is warning that a private credit winter is coming. And they say that the leading indicator for this is lenders shifting their focus on what they call real-time covenant changes. They say, quote, There is no better leading indicator of market psychology than real-time covenant changes, which is basically smart money fortifying against a downturn. There's the line I was looking for. So smart money is fortifying against a downturn. We see this crap brewing. You know, we run a fundamental analysis daily in our alpha report, and we're looking at what's actually fundamentally happening at Target, for example, and some of these companies that are like, everything's fine, we're gonna remodel our stores. And then you go look at their balance sheet and their cash flow statements and you're like, with what money? It's fugazi. Until these companies keep taking on more debt, they don't have money to pay for this. It's the same at Target, and it's the same at the artificial intelligence companies. The problem is, and I mean, we don't have to rehash this, but the reality is these private lending vehicles are such a scary disaster that you literally see that Blue Owl, who was just basically trying to scam their shareholders, that's my opinion, okay? Blue Owl got pretty much exposed for their scam, and now they're calling off the merger. So let me just briefly try to explain what's happening here, and I'm going to give you the basic explanation because, in fairness, I don't fully understand it either because it's so convoluted, and I do finance on a daily basis. But here's basically what's happening. Okay, there's a Fund 1 and a Fund 2 of this owl company, this Blue Owl right here, okay? Their company has lost like 40% in market value already, so they're already scrambling because they're like, dude, our stock's plummeting. And what's happening is they have these little feeder funds that are selling for less than book value. They're selling for a 23% discount. So the way you have to look at this is like this. This is what's happening at Owl. You have people are freaking out. Okay, so that's the foregone conclusion number one. One, smart money is fortifying and getting out of these private credit plays. Private credit, winter is coming with, a strengthening in loan covenants, right? We know that, okay? Owl Fund 1 is public, okay? Then you have Owl Fund 2, that's not public, okay? This one has the right to redeem shares at 100% value, NAV. This one trades at public value, which is a negative 23% discount to NAV. So investors here are losing 23%, and they're dumping more. So that's why, so investors here are like, yo, let's quickly get out here of here before we can't anymore, okay? Then Owl says, no, let's stop withdrawals. I kid you not. Let's stop withdrawals and come up with a better idea. We'll redo withdrawals in January, okay? So that way they can come up with a better scam. The problem is, so far, their first attempt at a better scam is failing. Calls off merger between two private credit funds after announcement rattles stock. Yeah, no kidding. The firm planned to merge its smaller, non-traded Blue Owl Capital Corp into the larger public traded entity, even as the merger would have meant 20% losses, right? So they're trying to stop the bleeding, but the bleeding's so bad that the market's basically hell no, F you. We don't want you to put a bandage on this. That's my opinion. Don't sue me, Blue Owl, okay? It's not my fault. You have
little PP.
It's not my fault. We're just looking at what's actually happening, and I have a feeling that if Donald Trump looked at what y'all were doing right now, he would have a few choice words for you.
They don't know what the fuck they're doing.
Yeah, exactly. So this is weird. When you put all of this together, it's just weird. Now, maybe this will all blow over. You know, maybe we'll find some new catalyst to go buy Bitcoin. Like The Economist is like, crypto got everything it wanted, now it's sinking. Yeah, because there's no like next level catalyst is what The Economist is arguing. Like everybody's already in, right? Okay, so now you have a fugazi propped up GDP. You have monkey see no evil on the jobs report, where we're literally getting rugged on even partial data. We're not going to report the data until after the Fed meeting, which now reduces the chance of a rate cut in December, which means we have even more of a chance of a policy mistake. The Federal Reserve's blackout window ends on Black Friday. So next Friday, it starts on next Friday. Next Friday, the Fed's going to go, no more talking from the Fed. So the Fed has a week and 2 days left, or 1 day left, to try to convince markets actually to price in a rate cut. But they don't have the data to do that. They're also rug pulling the JOLTS report for September, because these are always 2 months behind. So we're not going to get the JOLTS report that was due on November 4th. And we will get the JOLTS report for October on December 9th, which will be the day before the meeting. But we're not going to get any jobs report other than September, which should be the one good one, before the Fed meeting. Yet somehow Donald Trump wants the Fed to cut. Now, again, I get it, because Donald Trump doesn't want the market to sell off. So he has to call for cuts and hide bad data. It's a little dictatorish, I hate to say it. I thought he was only going to be a dictator on day one. I didn't vote for Trump. Remember, I voted for myself. That's what I said I was going to do, at least. Did I vote for myself? Did I write in Meet Kevin? The only guarantee I'll make you, I'll clarify that. The only guarantee I'll make is I didn't vote for Trump. And I did publicly say I might write in Meet Kevin. I can't run for president anyway. But anyway, it doesn't matter who I voted for. It really doesn't matter. I'm 51-49. You know that. So then you have Zero Hedge here complaining about a short-term flip in momentum signals, which is bad. CTA selling in every scenario. I generally think you do the opposite of what the CTAs do, but whatever. But look at this. They also make this very interesting argument. They go, why is it that since October, gold is down, treasury bonds are down, stocks are down, and Bitcoin is down? Everything is going down. Why are they going down? Well, Deutsche Bank thinks everything is going down because the Fed is going hawkish. But the Fed can't go not hawkish. Why can't the Fed not go hawkish? Or why can't the Fed go dovish? Because they don't have the data. They don't have data.
Data dependent.
But there's no data. The only thing there is
coupon code expiring soon. Coupon linked below.
It's because that's why.
Yeah. So these pressures are likely to persist given that inflation is lingering above target. Right. It's not great. Historically unusual rally as well. And a lot of debt. The debt situation is crazy. It's absolutely crazy. So, I don't know. This is all wild and not great to me. Now, what I also think is wild, but I think is great, is that a wedge deal that we just bought with HouseHack, our AI finder gave it an A score of, and we're kind of like, this is great. We're like reconciling that literally where we're putting our money is aligning with our AI finder. So I personally am pissed because I don't want there to be, some market correction. I want this crap to keep mooning because I want to license the crap out of our AI finder. This is just like a background demo of the picture. But like this will be cleaned up a lot in our actual app. But we score properties based on how good of a deal we think they are for your net worth. And so this was an A score, and it's actually a property we bought. And it's great because it sort of reconciles with like, hey, this is like our AI is working, right? And so we can't wait to license this soon. If you want to learn more about that, remember to go to reinvest.co or househack.com. It's the same company. You get 5% yield through conversion and 100% of the upside of the stock. Read the offering circular. There are risks with every investment, but we're a real estate backed play with the artificial intelligence upside. Now, in fairness, we're also prepared if there's a recession. I was talking about this earlier. I wrote, this is my Kevin's Evil Recession Playbook. If there's a recession, we take the $80 million of real estate and cash, and we leverage that to don't worry about what I wrote there. We leverage that up, which turns into a potential $266 million book, 186 mil of loans at low interest rates, which we could then deploy into wedges, which we think we could turn into $40 million of gains for the company. Obviously, no guarantees. It takes time to do all that, right? That would put us at a 60% equity or a debt to equity ratio, which is actually pretty reasonable if you do that at like the bottom of a recession. We are like so excited about what we can do here. Like we think we have a giant piggy bank. That's the evil recession plan, but I'd rather no recession. So just being transparent about that. But the numbers are not great. You know, Bitcoin, we got another chance to buy under 90,000. I don't own any Bitcoin. And yeah, you know, so I see some people in the chat, Kevin, why didn't you vote for Trump? Oh, look at the 595 line. Alpha report, baby. I saw enough of Trump 1 that, you know, while I knew there would be some short-term enthusiasm for business, I generally don't want to throw my hat on politics, so I'd rather vote for Meet Kevin. But I think some of the short-term ploys for business just break what we have in our capitalistic markets and just sort of accelerate the bad. And I'm not a fan of tariffs. You know that. So economically, I think you create a short-term bubble that ends up hurting more people. But it doesn't matter who I voted for. Like I say, you know, I said I was going to write in Meet Kevin. So it doesn't matter. But anyway, the point of all of this is just, I'm very frustrated because I wanted at least some data, right? I wanted at least some data. Right, that's usually what I see, like Ellis says, better than the alternative. I don't blame anybody for voting for Trump because I understand that sentiment. You know, there are a lot of people who are like, but Kevin, like, the alternative. I hate that. Like, that's why I'm like, I'm just going to write to Meet Kevin, because it's like, why can't we have, like, a good choice? You know? I don't know. It did feel like choosing between two evils. It is what it is, I guess. But anyway, somebody's like, why don't you run for office again? Because I think politics is rigged. I think it's rigged and I think it's a scam. So I'm just going to shit on everybody. I shit on Biden. I shit on Trump. I shit on Kamala, Pelosi's, Newsom. I dump on them all. Okay? Maybe we can like gracefully unite against the politicians. But anyway, I'm pissed. No data, which means no setup for a rate cut in December, which is bad for yields, which is bad for the market because the market gets no data. So you actually increase uncertainty for longer. It sucks. Yields are flat on the day. It sucks. Anyway, that's what's going on right now. And the good news is you can still take advantage of the Meet Kevin report. You get the Meet Kevin report by going to meetkevin.com. Not only can you get the coupon code and guaranteed best price, but you might be able to get a tax write-off as well. Get all the trade alerts, all the courses, every private live stream, the alpha reports. Your membership includes it all at meetkevin.com. Anyway. Pissed.
Investors pulled more than $500 million from BlackRock's iShares Bitcoin Trust, the largest single-day outflow since the fund's debut, marking the latest blow to a digital assets market already short on confidence. Again, shares of the iShares Bitcoin Trust trading lower now by 3.8%. Recapping, S&P up 22, up by about...
Yes, bitter break. Eventually, that will hit their cash flows. You are correct.
Washington, once again, your host. Here he is, Joe Matthew.
All right, Charlie, it's any time now. The president at any time could sign the discharge petition, the bill that was passed to force the release of the Epstein files. I guess technically the discharge petition is what forced the vote on the Epstein files. Now the question is whether the DOJ will be compelled to release them, knowing, in fact, that the president ordered investigations into Democrats like Bill Clinton that could prevent these files from being released while an ongoing investigation is underway. But I'm jumping too far down the road here. The fact of the matter is, all but one member of Congress voted for the release of these files yesterday. Only one member of the House, Clay Higgins, the aforementioned Cajun John Wayne, back when he was a sheriff, now Republican member of Congress from Louisiana, framed this as a stand on principle. He voted no. Everyone else voted yes. I asked Pete Aguilar, Democratic congressman from California, who chairs the Democratic conference in the House, his thoughts on this and how the numbers were so overwhelming. Here's what he said.
This shows that, Donald Trump allowed them. He said he was in a losing position.
No, people have gone too long without data. They need the data at this point. You know? By the way, I just want to shout out some of the folks who are... Oh. Okay. I just want to shout out the folks who joined the Alpha report recently here. Marco, what's up? Livy. I'm just going to go with Livy. Welcome. I think we got a girl. Let's go. Let's go. Marcel, Paul, Dimitri, Callie. Oh, that's another girl. Bob, Jay, Drake, Joshua, Adam, Omar. What's up? Welcome. Thanks for joining. Dude, we got 2 girls in that list. Let's freaking go. Let's go. I'm very... Shout out to the women. The women who care about finance. Shout out to the, 1 in 20 of you out there who actually give a flying F. You rock. That's cool. All right, Bitcoin's now under 89. Okay. Okay, the jobs data, that was bullcrap. Bury, we saw that. Target, okay, blah, 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 blah. Somebody says DEI members. Man, Alex, don't do that. Don't be anti-woman. That's... they're absolutely equal to you in every way. I hate that shit, honestly. I see, sometimes people, they'll share these things where they're like, oh my God, a woman is flying the plane. You're an asshole. Some of the best pilots I've ever flown with were women.
Women standing out there and holding up, and I'm sure you saw this, the pictures of themselves, 13, 14, and 15, very young girls saying, this was me when I was abused, raped, assaulted by Jeffrey Epstein. And they have asked the president, some of whom voted for him, to please have them...
Okay, I forgive you, Alex, on the joke.
Because they want what they have gone through.
I still love you.
And I think it would be so powerful.
But people feel that way out there.
So I'm very curious to see what happens. After that, of course, it is on to PM Bondi and the DOJ. And to your point, do they try to hide behind a smokescreen of new investigations to not release files? But I think in the long term, the fact that this is a bill out of Congress, it's going to make that all that much harder to do. But they could try.
Well, Jeannie, you hit on one thing that I did want to kind of ask about, which is the survivors, as they call themselves, haven't gotten a whole lot of play amidst the talk about will he or won't he sign, what is he going to do with the DOJ, that sort of thing. But they were the center of attention for the likes of Marjorie Taylor Greene and others who have been pushing for this. And they were actually, in fact, the center of attention, arguably, for Representative Higgins, who said that he voted against it because he was worried about the disclosures hurting the survivors. So where do you see that going from here? We're obviously focused on the procedure of all this, but are we going to be hearing more from the survivors, do you think, in the days to come?
I do think so. They have waited so long to get any relief. They suffered in silence for so many years, and they have been pushing for this. Their attorneys work.
All right, this is boring. They're going to get a bunch of redacted files. It's going to be a scam. All right, so market is dropping, everything's dropping, everybody's losing money. Yeah. Dude, Super Micro gets hosed. Hopefully it wasn't my fundamental analysis this morning in the pre-market that drove them over the edge. Dude, we shit on them hard this morning in the course live. Because how, during this environment, are you guys seeing sales plummet like this and your margins going down? What's happening? Oh my gosh, AMD loses this line too. Come on. 89, DoorDash. Wow, dude, DoorDash is going on sale. Well, Fund's gonna go bankrupt here soon. Holy smokes. This was the Travis Kelce pump. That's like a tweet. So when did he get in? Travis Kelce Invest in Six Flags. That was October 24th. Fun stock. It has not been fun. Fun stock down. Holy smokes. 47% decline. Wow. Wow. Yeah, that's definitely tweetable. Nobody will see it, though, because Elon doesn't like my tweets. But I'll do it anyway. We'll log the history. Six Flags stock down 47% since Travis Kelce investment into fun is revealed. Into Six Flags is revealed. Not even Taylor Swift can save the U.S. consumer. RIP. Dude, that's a harsh chart, honestly. That's harsh. Somebody says, I see your tweets. Oh, thank you. I see you. Thank you. Wow. Wow, wow, wee, wah. It is not a good. Fun not having fun. Cedar Fair. Yeah, didn't they buy the Cedar Parks? Ugh. You know, I feel like a red flag for Supermicro was how much they were advertising to me on X. It's like, are you guys really running out of people to sell to that badly? American exceptionalism trade is waning. Okay. Oh, you know what? We need Gemini to make a rug pull picture. I wonder, let's see. Rug pull. Okay, let's see what it gives. I'll do. Let's do some Gemini. Create images here. Oh, okay. Okay. Rug pull of the American flag. Oh, wow. Ooh, but that one's better. Ooh. Two good images here from Gemini. Look at that. That's the Gemini broken flag, and this is the rug pull American flag. Dude, that's impressive. Both of those in like, and what? 10 seconds? It's insane. Very impressive. All right. No, the FOMC minutes won't do anything.
American dream, and it's sort of a God-given right, and we've got to figure out how to make sure that everyone can be a homeowner. The last time that happened, it led us to the subprime mortgage crisis, and there were a couple of presidents who were in on that game that led us to where we had the bubble burst in that way. And so, you know, I wonder, you always bring up the idea of maybe you shouldn't be an owner and you should take that money and invest it in the stock market. Maybe we have to get our heads around the fact that some people will be destined to be owners because that's their financial situation, and some people just won't. And there's got to be a certain amount of acceptance around that, too.
Brian, Marcus Lemonis, though, would look at me and say we should encourage as many people, if not all, to be homeowners because it's the best way to build long-term generational wealth.
Hell yeah.
Yeah, I think it makes you a...
Hell yeah, Taylor Riggs. Welcome back. Dropping the facts. I like her.
My property, you get mad when people increase your taxes. If you don't have property, you don't get hit by property taxes. You never get mad about that. So I do think independent ownership does matter. But it's not the dream for everybody. Like it definitely is not. I'm generationally bound. As a Gen X guy, home ownership was just part of my view of what it meant to be an American. But I know Gen Z, Gen Alpha, whatever, they don't necessarily think that way. So maybe we shouldn't be asking them to conform to that view. But I do get nervous about it. Because when you don't own stuff, then you look to other people to give you stuff more often than if you own things. And so that's like a cultural issue that gets me, Taylor.
Yeah, Dagan, weigh in.
the largest U.S. subsidies tied to personal behaviors that the government tries to encourage, like families, like having kids. The biggest one is buying and owning a home. In terms of, it's like $500 billion a year, roughly, that goes toward subsidies, mortgage interest deduction, property tax deductions. This even includes with the SALT.
Yeah, like what's the sign of these HELOCs and stuff getting? Yeah, that was from the Daily Wealth. I actually have it up right here. If you don't have the Daily Wealth yet, you could download the Meet Kevin app. It's totally free, by the way. And quick hack, if you go to the videos tab and you go to the hamburger menu, you could customize the notifications you want. So like, if you want all the live stream notifications and you don't, like you're missing notifications on YouTube, get the Meet Kevin app on Apple or Android. Just literally type in Meet Kevin and you'll see it. And it's free. And then you can customize your notifications for the video. If you want the alpha or the Daily Wealth emails or notifications, you could get those as well. And I was talking about freezing credit lines and that. I don't think we're at the place yet. I think when you start seeing some banks talking about freezing lines, then it'll spread like wildfire. But so far, you're just seeing these idiosyncratic freezes, not like market-wide freezes. So, yeah, that's my take.
And right now, we went through the cost of insurance and maintenance. That is another reason why you have to be ultra careful, putting your own money on the line and trying to get into a home that you know you can't afford just the monthly payment on, because a realtor will try and squeeze you in to some property that you don't even like. And then you get stuck with it because home prices are falling right now. And that is the vice grip of the affordability problem, because people who own these homes, particularly who are already underwater, don't want the prices to fall. What, more than 53% of homes are falling in price year over year, according to Zillow. But the people who can't buy need those prices to come down.
Cheryl, desperate for your thoughts on Tesla, because we have to pivot. So, Tesla just got approval for robo-taxi services in Arizona. Now, Tesla CEO Elon Musk said earlier this year he had hoped that Tesla robo-taxis would cover half the U.S. population by the end of this year. That's a little far stretched because it's November. We're not quite there yet. Would you do a robo-taxi?
They're coming. No, it's the evolution of the helicopter. Right now, for the 2028 Olympics, for example, in Los Angeles, a company has just gotten approval. They're working with the FAA, obviously, because of the airspace issue. And these are going to be basically robo-taxis. It is going to happen. And this is technology. This is the future. They're quieter.
She saw your car and upped you a plane on this.
Yeah, is she talking Joby or Archer?
It's happening. So, and I think that, the biggest thing is going to be our airspace is getting crowded. We'll talk about that later.
Yeah, that's a total pivot from Tesla.
Tonight. But
Archer is selected as air taxi provider of LA 2028.
Aircraft, but it still is going to happen.
Dude, if those things crash
quicker than you think.
I love it. Let's do it. Coming up, colleges are under pressure as grads.
That's all they're going to say about Tesla? Oh, come on. They didn't even mention that you still need the human supervision. Like, how do you leave out the most important detail? Stupid. That was weak, Fox. Come on, Taylor Riggs. You should have known that. Should have said it. Basic. Somebody here writes, stonks will go up, Nvidia will boom, $2. All right. Or how about we build more homes? Cody Moore. Yeah, that would be smart. Wouldn't that be something if our government would actually enable that, let's see here. Did I miss any supers? No. Wait, what's this? All politicians are liars, Democrats and Republicans. Hell yeah. Pull up the MSTR chat if you can. Chart. Okay. Sorry I missed a couple of y'all. I still love you. It's just sometimes I'm in the middle of yapping and then I just legitimately do not see them. Oh my lord. Negative 10% on my... You don't even want to know what the bottom of the Alpha report says about MicroStrategy and STRC. I'm not going to reveal it. But you could look at my historical Alpha reports for like the last month, at least, probably. And see my note about MSTR and STRC. It's literally like the bottom line of the whole Alpha report. And I leave it there every day as a reminder of my opinion on MSTR and STRC. It's very, very blunt. Somebody says her hair is cute today. Taylor's? Oh, I didn't even get to look. Honestly, when the TV is on, I can barely see it. It's very inconvenient. I mostly just listen to it and put it on for you all. So I didn't get to see. I have to like crank my neck. But now I'm going to go watch the Meet Kevin live stream back. And I'm going to go look. That's what I look like? Oh, I'm sorry. That's unfortunate. That's bad. Oh, that's Deegan. Where's Riggs? Oh, that is cute. How long did that take to do? Do you think she has hair extensions? Could be natural. Like this half right here. Those could all be extensions clicked in. Because her hair doesn't seem that thick up here. Those are probably extensions, honestly. What do I know? Why are we talking about this? Let's go back to talking about Grindr. No. Axios. Republicans to force vote. What is this? Polls show Democrats. Okay. Extra, read all about it. Exclusive AI Infrastructure Coalition. Push for pro-AI policies. Oh, whatever. Okay. Google, Gemini, so much Gemini talk. The AI bubble, we talked about that. Ooh, what's this? Mark Epstein?
What I do want to talk about is I've been recently told the reason they're going to be releasing these things and the reason for the flip is that they're sanitizing these files. There's a facility in Winchester, Virginia, where they're scrubbing the files to take Republican names out of it.
Yeah, I mean, duh. What'd you expect?
First quarter, second quarter, what we are going to see is we have brought the inflation down. It is curbing.
Right. I have to go to the bathroom again. So we're going to listen to Scott Bessent probably 2 times because it'll probably take 2 times for me to go to the bathroom. And yeah, sorry.
And my prediction is that first quarter, second quarter, what we are going to see is we have brought the inflation down. It is curving down. And real income, the other side of that equation is real income growth. And we are going to see this from all this investment.
Would a $2,000 tariff dividend check going to people be inflationary?
Well, there are a lot of things that are going to happen next year.
Is that one of them?
And that could be one of them. And again, maybe we could persuade Americans to save that because one of the things that's going to happen next year is the Trump accounts. Every child who was born from January 1st for the next 3 years is going to get a government account that goes into the stock market. So every American child born for the next 3 years, starting January 1st, is going to have that. They can take it out when they're 18. They're going to learn the power of compounding, and there's going to be a lot of financial literacy around that. And I think the reason that we saw kind of the disastrous election in New York is young people don't feel like they have a stake in the economy. So we want to give them a stake in the economy.
We know that.
Okay. Oh, it didn't even replay. I made it within 1. Okay, so, yeah, all right, well, that's not a big deal. Go save your stimmy check. Okay, whatever. How about you get it first, and then let people do whatever they want? Okay, so, what else? Who's talking to Trump? Said he's talking to Democrats. Healthcare. No Democrat will admit this. Okay, Scott Bessent, Gemini, VIX, Blowout, Gemini. What's going on with the Japanese carry trade? Binance article. Markets have 60 days to reprice. Japan drops $110 billion stimulus bomb, and global markets immediately feel the shockwave. 50 euro. Can we go back to Duolingo chart? I have lost already a lot of money, but I have not sold yet. Right now is bad time to sell, right? We have hit support, question mark. I believe in the company, but can we go lower? F me. Well, the problem that you have with Duo, beyond, you know, potentially just the numbers itself, the problem you have is this expectation that you could put on Meta glasses and not need to like learn another language. I hate to say it, but I feel less inclined to spend the time to learn another language because AI is just like, what's the point? Like, I'd be better off learning how to code than to spend the time on another language. So that's a risk. Somebody writes, bro, you sound like you overinvested. I mean, that's sometimes the downside of like double and tripling down on a stock that's running, but it's done very well. Duo, let's see here. Duolingo. What's their ticker here? Why is this not working? So, Duolingo. Oh, yeah, DUOL. Okay, yeah. All right, let's save this. This is DOUL. Or is it Duo? There we go. Duolingo. 10Q, 11, 19, 2025. So let's look at their last earnings report really quickly. Super fast. So, you know, even just like using the AI app, translator apps right now, cuts out the lag that I feel like you're going to get on the glasses. So let's look at their cash flow. Their cash flow should be good, if I recall. They should have good cash flow here. So we have no financing. That's good. I've got cash flows, amazing cash flows. Really, really good cash flows. This is fantastic, right? So 77 times 3, no. I've got divided by 9, 280 divided by 3, 90. Yeah, 9.3. Okay. 93 million of quarterly cash flow, which is really good. And then if I go to the balance sheet, because after all...
Kevin is much more interested than most people, by the way, in the balance sheet.
Okay. I've got total liabilities, deferred... I have no debt, bro. This company has no debt. No debt, basically. I mean, they have one lease debts. They have no debt. This is a great balance sheet. This is probably one of the best balance sheets. Fantastic balance sheet. Really, really good. So what's going on with revenues then? I mean, revenues is still growing. Was their forecast bad or what? I mean, gross profit is up 40% increase in gross profit. That's very nice. G&A, marketing, R&D. I mean, this is great. So, you know, what's the problem? It has to be valuation. That's just what it has to be. So, let's find out. So, let's see what the valuation of it is. So, add Duolingo is kind of add new Duolingo, kind of like a lime greenish, huh? There we go. I feel like that's what we did for Google. Let's see here. Duolingo financial analysis. And we have 8.46. EPS growth is... Oh, why is EPS projected to tank, bro? Earnings per share expected to halve next year before rising again. 46.55 plus 22.69 plus 33.5 plus 20.86. Wall Street's expectations over the next 4 years are that they're only going to grow by 7.62. That's Wall Street's expectations. So let's drop this in here. This is the Duolingo. Amazing. I'm going to say it. Amazing balance sheet. No debt. 93 million per quarter of cash flow. Very good. It's actually free cash flow. Free cash flow. Very good. The earnings grew 40% year over year, but the only thing, clearly, they have pricing power. I mean, what were the margins? The only thing that could be crazy would be the valuation. So 40% gross profit increase. Gross profit is 196 divided by 271. Dude, they have NVIDIA margins, bro. NVIDIA margins at 72%. And this is very, very impressive. Like, all of that is very impressive. All very impressive. So, again, the only issue could be valuation. And what's the ratio? Cat, dual. We have... That's not bad. That's crazy. 2.63 peg. Wow. Then it must be momentum. Because the valuation's actually, it's coming towards fair. So fair value, maybe you just had to come down to it, right? Fair valuation closer to 2.69 times. Well, I mean, we're actually there. It's now fallen closer to fair valuation. Now fallen closer to fair valuation unless AI fears kill the momentum on it entirely. Right, so that's going to be dependent on growth. So let's see what are people saying on it. That's interesting. Yeah, because it's basically at fair valuation right now. So that's it. So Dual, I've got company news on it. Shifts focus on user growth over near-term monetization. Sinks after Q4 bookings missed. Okay. Last sell-off driven by Q4 bookings miss. Right. This is a company that relies on pure growth. Relies heavily on growth. This is like NVIDIA missing, right? If NVIDIA missed, the damn thing would tank like crazy too, right? Oh, you said another 50 euro. Thank you for helping me. So if I believe in the company long term, I should not sell right now, right? I can't give you personalized advice. The problem is you always have to remember that stocks go in cycles. And I don't know what your personal situation is. Like, what if you're loaded to the, titties and debt already? And then you're going to get margin called, Maybe selling is the right answer, because we might just be at the beginning of a correction. Or NVIDIA, NVIDIA could smash and then we rally into the end of the year on no data, right? We're at this bizarro turning point today. In fact, let's talk about that. Let me put those screenshots in. But yeah, the valuation, none of the four I have, when I look at stock foundations, I look at, momentum is the fourth one. I have a 2x2 rule when I look at foundations. Okay, so let's look at this. Kevin's 2x2. Kevin's 2x2. It's like the Rust 2x2, right? Pricing power, massive. Good. No question about that. Balance sheet, great. Good. Okay? Then you have valuation, fair, fine. You know, it's not like it's super cheap. And then you have momentum. You know, that's what's dying. Bad. You know, going from good, like, high momentum to lower, going from strong momentum down. So now it comes to, you know, personal debt, allocation of portfolio, the AI risk. You know, it could just be, it's just like a sentiment move. Because fundamentally, the valuation's fine, but not in a recession market, you know? So who knows? Maybe it keeps going down and you get a deal on buying some more shares. But again, it all comes down. I mean, look at this. You're below the 200-day moving average. You're below the 100-day moving average. The lack of the dying user growth, they have to U-turn that. Otherwise, you're screwed. So, let me see. Duolingo. Earnings call. And they know that. Dual earnings call 11 IT. By the way, this is the kind of stuff that we do like multiple times a day, almost every single day when the market's open in the course member live stream and the Alpha Report. Just like, you know, you shout out a company, we just go deep. But, you know, this is just a quick look. So, growth. Huge opportunity right now in education because of AI. Because of AI, we have line of sight to create an app that can really do something better. A good human tutor. The problem is, if they're going to shift, that's a danger, right? If Duo wants to shift to be an AI tutor, they have to compete with Gemini, 3 and GPT 5.1, etc. That's hard. They're leaving their niche. Investing long term. There's a lag whenever you improve. It takes a while. User growth, there's a lag because it takes time. Opportunity is large. Blah, blah, blah. Yeah. What else to say about growth? So we posted 36% year-over-year growth. Wait. On the other side, we paused all the unhinged posts in our social media for a bit because we were listening to the community and trying to build brand love. And when we didn't post unhinged things, that basically our posts were much less likely to go value. Because of that, we had... This is the most hilarious shit I think I've ever read. The CEO of Duolingo is basically saying as soon as we stopped shit posting, things went bad. Oh my god, we gotta tweet that. Oh, that's hilarious. You can't, like, sometimes we look at stuff here and we just can't believe the stuff we get here. It's actually hilarious. Oh, the minutes are coming out. Ah, damn it, I hate the minutes. I'll read you the notes of the minutes as they come. Well, all right. Minutes come out in like 5 seconds. So I'll probably... Oh, yeah. Jesus. Oh, God. I can't even read all this. All right. Jeez, Lord. October meeting saw modestly stronger real GDP. Okay. So I'll deal with this Duolingo thing in a moment. Let me just see if there's anything interesting in this Fed thing. Fed. Let's go over here. So Fed minutes say some participants favored larger proposal, citing benefits, greater flexibility. Fine. October meeting, modestly stronger real GDP. Modestly stronger real GDP through 2028. Okay. That's probably why they're pushing for, no cut, right? Then I've got some participants cited greater flexibility in treasuries. Almost all wanted to conclude QT DS1. That's because of funding stress. Several participants highlighted the possibility of a disorderly fall in stock prices, especially in event of an abrupt reassessment. Wow. Let me just write that down. Several participants highlighted possibility of disorderly fall in stock prices, especially in the event of abrupt reassessment of AI-related prospects. That's interesting. Because, that's basically like saying, here, I'll write that down. Fed minutes. Fed watching stonk prices. What stage of the cycle is that? What stage of cycle is Fed watching stonk prices? Kind of interesting. Makes me wonder. Okay. I want to see them in context say that. Almost all, we saw that. Several highlighted the possibility of, okay, most participants are appropriate to conclude. Many favored October cut. Some said no change. Risk of higher inflation becoming entrenched. Risk of higher inflation becoming entrenched as people expect higher inflation to be accepted. / people may misinterpret the Fed's goal. Yeah, we're already seeing that. We're seeing many say the Fed's de facto target is 3%, because that's where we've been for so long. Many think keep rates unchanged rest of year. Many prefer to keep rates unchanged rest of year. Fed. Okay. Let's actually go look at the doc now. Fed, FOMC. Okay. Fed. September statements, October. There we go. Fed, FOMC, October. Oh, I thought I'd be done before we'd get to this. Nope, here I am. Fed FOMC minutes, October. Okay. Fed. Stocks. Okay. Broad equity indices. The manager noted that rising stock prices were consistent for robust expectations for stocks. Fine. Technology stocks. Longer term optimism. What about equities? For equities, Price to earnings ratio stood at the upper end of their historical distribution. Also reflected demand for risky assets. Vulnerabilities associated with business and household debt were characterized as moderate. That's boring. Credit card delinquencies down in September while auto loan delinquencies ticked up. Okay. Asset valuation. Okay. So, vulnerabilities associated with leverage in the financial system were characterized as notable. Available data suggested, okay, by contrast, banks remained resilient. Vulnerabilities associated with funding risks were moderate. Staff economic outlook. What about the, where's the AI talk? Because I want to see that, like, reassessment. Reass. There we go. Some participants commented that stretched asset valuations in financial markets, while several of these participants highlighting the possibility of a disorderly fall in equity prices, especially in the event of an abrupt reassessment of the possibility of AI-related technology. Right. Right. I mean, that is a big deal. Like, basically, if AI poops the bed,
Poopy doopy.
You've got nothing supporting the economy. The economy has no leg left. Job gains had slowed this year. Unemployment edge up. Downside risk to employment had risen in the coming months. Well, yeah. Against the backdrop, many favored lowering the target range at the meeting. Huh, interesting. Bro, I need more coffee to read this trash. Inflation progress had stalled. That was the concern. What about expectations? So, investors' expectations for policy rates virtually unchanged. Market-based expectations for long-term yields declined. Short-term inflation expectations had eased. Longer-term remained well-anchored. Yeah, if we unanchor, we got real problems. Oh, what is this? Importance of maintaining long-term inflation expectations. Yeah, so you don't have the 1970s all over again. Labor market data before the government shutdown indicated job gains had slowed. Participants commented that the lack of jobs data for September during the meeting commented on the lack of data, relying on private sector data and limited government data. Consistent with layoffs and hiring that have remained low, but not sharply deteriorated. That's good. We don't want to see that. Outlook for the labor market. Expected conditions to soften gradually in the coming months. Labor market to remain less dynamic. Businesses are hesitant to lay off employees. Several describe the lack of turnover. Note a further weakening in labor market. Oh, look at this. Noting a further weakening in labor market demand could push the unemployment rate sharply higher. Broader labor weakness. Let's see here. Economic activity appeared to have expanded at a moderate pace. Divergence of spending across income groups. Old news. Inflation outlook. Persistence. This was the stock part. Private credit. Various reasons for concerns in private credit, including loan quality, poor underwriting, and the possibility of transmission to the real economy. Noted that financial activity was moving outside of the U.S. regulatory framework. Oh. Interest in kind, payments in kind remained elevated. That's bad. That's distress. Okay, that's their private credit take. What about labor? Some more on labor. Right. Yeah, the December cut, not appropriate. I agree with you. Is what discussion in near-term policy, different views. Most participants judged move towards over time, did not indicate a 25 would be likely appropriate. Right, exactly, here. Did not favor the 25. Could be appropriate if the economy evolved, but we don't have data. So, that's that. And if I go to labor, no evidence of a sharp deterioration. Yes, that's true for now. Okay, what is this? Risks around employment and GDP forecasts continue to be skewed to the downside as the elevated risk of a cooling labor market raised the risk of a sharper than expected weakening in the labor market. Right, of course. And this is a no-brainer. Soft labor would keep inflation in check. Yeah, as long as the expectations don't move. Right. Labor force participation, down, right. But that could also flip-flop. Welcome, Anthony, channel member. Leaving the labor market more susceptible to negative shock. What did? Uncertainty indicating downside had, okay, many participants. Labor market conditions. Okay. And then let's do, was there anything else on AI? That was just the reassessment part. What about participation? This is all participant. Labor force participation was only mentioned once. And I don't think they used the R word. Yeah. Downturn. China, valuation. Corporate debt grew, household balance sheets remain strong. All right. Let me see if Nick T is saying anything on this. Sometimes he gives us some juice. Oh, did Barry just post again? First page of Buffett partnership. S&P was down 30% down. A decade later, down 3.4%. Purchasing power of the dollar. Total inflation loss for investors. Whatever. It's talking about like a decade of gone. And that's possible. Oh, let's listen to them.
In the minutes, we're seeing some of this same stuff. It says several participants indicate that they did not view a 25 basis point reduction as likely or appropriate at the next meeting. Then it goes on to say several participants would see it appropriate for more rate reductions this year. It adds that one participant wanted a deeper rate cut of 50 basis points. That obviously Stephen Myron. But there's the division. So everyone generally showed concern for the weakening labor market and believes that they do not see inflation substantially returning. There was a robust debate about how restrictive currently the policy stance is. Some participants say that even with a rate cut at the last meeting, the federal funds rate is still holding back the economy, and there's concern over that. Having said that, the Federal Reserve Chairman in the last meeting in his news conference said that he wanted to possibly wait and see. They're in that 3 to 4 range for the federal funds rate, which is close to the neutral rate for them. So he said might now be appropriate to wait and see unless the labor market shows weakening there. He did say that they're looking at a number of layoffs from a number of companies. On that front, there's a little bit of news. The Bureau of Labor Statistics says that there will not be an October jobs report, and the November jobs report, originally scheduled to come out right before the federal funds meeting or before the FOMC meeting, will now come out after the Fed meeting, which means we'll see no more jobs reports from the federal government until that decision, or until after that decision on the next interest rates is made. So clearly the dissents were in this last report here. You can see there was a dissent on the Myron wanted to go 50 basis points, and then you had Jeffrey Schmid from the Kansas City Fed who wanted to keep things as they were. And that division is paramount throughout the entire minutes of this, talking about some participants wanted to see, believe that there could possibly be no more rate cuts this year. Other participants, again, using the same language, several participants say it might be appropriate. So that division is clear, Charles. We'll have to see what we get, 50-50 maybe, coming up in December.
Oh, we are not close to 50-50. Not close at all to 50-50. So I don't know what he's smoking. But I don't actually think much of my, there's that much surprise in this. Oh well. All right. What else? Let's see if there's anything else juicy going on here. Let's find out. Well, first let's see the sticks. Oh yeah, so on Duo. Yeah, I mean, really, okay. So the Duo problem is the following. Let's put that here. I'll put my full annotation up. Full annotated FOMC notes. If you want my notes on the FOMC, I'm going to put them all up. You'll be able to get them in the Meet Kevin app. So if you download the Meet Kevin app, you'll just be able to get my highlights on it. And it'll be under the data tab, under that first Fed post in about 30 seconds. Because I'm going to link it there. Thanks so much. Oh, yeah, John. Yeah, so you're welcome. Hashtag not personalized advice. And there we go. Okay, what I wanted to do was finish this and just say that in the earnings call, Duo talks about becoming a tutor and utilizing AI to expand their services. I know this is branching out of their niche and moving into Gemini GPT territory, which will be very hard to compete in. As an AI play, you probably need a rising tide of all AI plays to go up, including a big move up on NVIDIA today for short-term bottoming, right? Like if you get a big move on NVIDIA today, Duolingo, maybe it bottoms and recovers. So, okay, good. So that's there. I did the annotated notes are there if you want them. You can get them in the Meet Kevin app. It's free. Meet Kevin or just type in Meet Kevin in the Apple and Android App Store. Obviously, the stock tab is course members only. We don't even have that listed as a benefit. We should do like fundamental, analysis archive stock tab. It's not even listed as a benefit of the Meet Kevin membership. It's a bonus. You just get more. You get more than you pay for when you come join the Meet Kevin membership.
Big PP.
That's right. Okay. So let's see. Oh yeah, we were gonna do the Duo poster. Right. So how are we gonna do that? Well, what we're gonna do, we're gonna take the earnings call, and then there we go. Let's see here. Let's see what we could do. So, how much are they down from peak? Let's go there. Duo stock. They are down. Wow, 47% year to date, 67% from peak. We paused all unhinged social media posts for a bit. That's crazy. Okay, so Duolingo down 67% from peak as their CEO says, we paused all the unhinged posts in our social media for a bit. Which did have an impact on user growth. Because of that, we did have an impact on user growth. Yeah, paraphrasing here. So SH9T posting pumps the stock. May as well include the citation too. It's just kind of hilarious. Unhinged social media posting. All right. What stage of the market is that? Companies like, oh guys, we're doing too well. We're SH9T posting too much. Oh my gosh. All right. Tesla's almost at 0 for the day, and we lost 89 on BTs. MicroStrategy. Okay. All right. I'll see you for